Confidence, perhaps. That's the view over at Citi. But the bigger picture around defence, we're live at the Munich Security Conference in a week where President Trump has said he wants perhaps the US, China and Russia to spend less on defence, but maybe more being spent by the Europeans, Guy.
Yeah, try and fit all that together. I think you're going to have a tough job. Let's talk about the market open Friday morning. What are we anticipating? I think probably fairly flat, but there's risk into the weekend. Do we need to price that as well? That's a factor to work our way through this opening trade. Right, here we go. FTSE 100. Absolutely flat. Yesterday, actually, the FTSE had a few laggards and it underperformed. Does that continue into the market this morning? At the moment, we are absolutely flat as a pancake. Not much to see here. The Stock 600, also not much to see here. The single stock story this morning, I think, is going to be where the interest lies. It is going to be names like MS. It is going to be some of those defense stocks. It is going to be NatWest, Safran, some of the other names that we're watching so carefully this morning. There's plenty to think about at a single stock level. I have to say, though, at an index level, it's looking pretty uninteresting. The IBEX is maybe the underperformer, down by a whopping 0.2%, Critty.
Well, I think right off the bat, you are seeing Hermes kind of take the cake here. It's your biggest index contributor to the upside. And I think it's really, from a sectoral perspective, paving the way for the other major movers to the upside. I'm looking at LVMH here this morning. I'm looking at Carey. I'm looking at Montclair, all seeing some green on the screen. I think that's where your leadership is when it comes to the upside and the Stock 600. But broadly, you are seeing more downside than upside, Anna. And I think that's where the pharmaceutical story really shows up, because your laggards here this morning, AstraZeneca, Novartis, Sanofi.
Right, yes, so that points to perhaps some concerns around that sector and where tariffs might fall next. We've heard that about reciprocal tariffs, not a great deal of detail, a lot of concern about whether, or a lot of questions about whether this will actually happen and when and how. But then on top of that, President Trump talking about specific sectors that could be in focus. I know autos was one of those. You were talking about pharmaceuticals as well. In terms of some of the individual movers then that we have this morning, of course, it's a little lighter on the corporate reporting front, aren't we, than we normally are. I do see Hermes, though, if you look at things on a points level, Hermes doing really well.
Yeah, LVMH, second best gainer. Luxury sector is definitely getting a lift this morning. Montclair also had numbers out yesterday. That's going to give us a lift in terms of that story too. So we're certainly seeing that sector absolutely front and center. HSBC Holdings, though, is the biggest points drop on the other side. Normally you hear restructuring, job losses, and the market takes that as a positive. This morning that's not happening, which I think is interesting. So why is that being taken maybe slightly differently? Anyway, HSBC is down by 1.1%.
I'm curious what the kind of read through is. And I mean, you guys just went through the luxury picture as well, but I'll just add here, this is where the tariff story, I think, it gets really interesting, because this is a sector that is far more exposed to China, perhaps, in the Chinese story than maybe the United States story. Does the tariff piece bring it into full focus, especially as we're talking about maybe pivoting away from a Chinese consumer to an American one, if that's where the economic strength lies? Nevertheless, green on the screen across the board. You mentioned it, Montclair higher by 1.8%. Hermes is clearly your outperformer, higher by 4.8%.
But you have to have pricing power. That's the difference. LVMH, does it have pricing power? Do these other companies have? Hermes definitely has pricing power.
Yes, I mean, it's all relative, isn't it? They have pricing power versus a lot of other consumer-facing goods companies you could name. But yes, within the sector, Hermes certainly stands out as one that does. And they're talking about that this morning and saying that they'll use that pricing power to take on any tariffs if they are applied. Let's talk about the banking sector. Interesting, NatWest is down 1%. You were talking about HSBC being down. There's obviously limited read across between one and the other. One's very much more UK than the other. But NatWest is down this morning, despite I'm seeing on expectations that this stock might go a little higher this morning, but it's only down 0.8%. They're talking about when the government's going to get out of this business, that by the spring seems to be the thinking. We saw the sector under quite a lot of pressure from the Barclays numbers yesterday, so there does seem to be a little bit of a rethink there. I thought it was interesting, the NatWest CEO saying they're pricing in 3 more cuts from the Bank of England this year, and obviously that's not great for banks generally, even if they are cushioned by these sort of natural hedges, but that's not great for banks generally. So maybe there's some upside there if we don't get all of those rate cuts in the UK.
I just want to flag BAE Systems, big defence contractor out of Europe. One of the few in Europe that has a really big footprint over in the United States. And I just wonder whether or not you are seeing it react to the I'm going to cut defence spending story out of Trump, rather than the Europe needs to spend more story out of Trump. Because it's interesting that it's dropping this morning. I just want to take a look at the kind of slightly longer term picture. But I wonder whether US defence stocks may have a slightly tougher day. BA had a really good day yesterday. Maybe we're just unwinding a little bit of that. Over the last 30 days, it's still up in positive territory.
Yeah, I mean, for the sector, what the result of that equation looks like, you know, US, Russia, China down, Europe up, if that equation could ever be put together, what the result of that would look like for the overall sector is a complex one.
Especially on a day where Rheinmetall is your biggest index, or I should say mover in the DAX, in a broadly lower index. The DAX as a whole down quite significantly as well. Let's talk about pharma here. I think we talked about all the other sectors. We talked about pharma a little bit at the market open, because we are seeing that really the laggard this morning. And Novo Nordisk, to me, is I think the sole outperformer here, higher by about 0.3%. Now, this is important here because Novo Nordisk, I think 60% of its revenue comes from the United States. So that's really where you start to see, in the context of at least the tariff conversation, the trade conversation, or even the Greenland conversation with Denmark, Novo Nordisk serves as a key purpose. The rest of the kind of healthcare pharmaceutical stocks on the back foot this morning.
What surprises me, I'm going to jump ahead a little bit, is that we're not seeing the same effect in the auto space. Volkswagen's actually positive this morning. I just want to double check that it's actually open, but I think it has. You've got some losses coming through, so Stellantis is down, BMW's down, Mercedes is down, but they're not down a lot. And you would have thought that the firm focus of the Trump administration on this space maybe would cause a greater level of uncertainty. But maybe it's already priced.
Well, that's it. I mean, if you didn't know before yesterday what the tariff picture for autos is going to look like, you still don't know what the tariff picture for autos is going to look like. You know that there might be one tariff on top of another tariff, which I suppose is what you take away from yesterday listening to President Trump. Let's return to the defence sector, a real focus of our attention this week, of course. The European defence sector is on high alert as leaders and investors weigh the latest comments on Ukraine negotiations from the US administration. Let's now head to the Munich Security Conference, where Oliver Crook is standing by for us once more. Good morning, Ollie.
Yeah, and if diplomats are having a bit of a roller coaster day, so too is the defense industry. I mean, you just look at the sort of share prices across the industry over the last couple of weeks, and every time you get a comment, could there be peace in Ukraine? You see it go down, then you say you need to be boost more spending, spend more on U.S. SEC, and then again, this meeting yesterday you had apparently where Trump is wanting to have potentially, having the defense budgets of China, Russia, the United States. All of these things are coming into the mix right front and center here for a lot of these defense companies that need to make investment decisions on the things that they're hearing from the U.S. administration. We're pleased to be joined by one of the people making those decisions, Michael Johansson, who is the CEO of Saab. Thank you so much for joining us here. How difficult is it right now? Even a week ago, you said it's very difficult to have any visibility on what's going on for demand. How difficult is that for you right now?
No, absolutely. I said that a week ago, and I think it's even more true today. But we still see a high demand in the market. I mean, and I think the notion now, the view that Europe has to step up and do more, statements like that have been coming all the time now from the US side. So, of course, if that is happening right now, I think many European countries will start to think about collaboration in a lot to a larger extent and actually spending more. And that will drive demand, so to say. So, but who can tell exactly what's going to happen if Europe comes together?
And on the European side, are you very encouraged that that is happening? I mean, there was a lot of rhetoric for a long time. You were a little bit skeptical when we spoke, I think, a couple of years ago. Yeah. Are you more confident now that Europeans are getting serious about this?
Well, I mean, from the European Commission, it is quite clear. When von der Leyen is putting sort of defense and security really high on the agenda, we have a new defense commissioner with a really high ambition on coming together, spending more money. identifying flagship projects like integrated air missile defense system, unmanned collaborative combat aircraft. It could be sensor technology. All of that must, of course, happen also, and it will be depending on politicians saying that, okay, let's put some eggs in that basket, the common basket, and get going on these things. But who knows? It's still a negotiation, and we have that at the same time as they are negotiating the next budget in the EU.
Yeah. And so more specifically, we're here at this event. We're going to hear from J.D. Vance in a couple of hours' time. From the people we're talking to, some officials are kind of concerned that this is going to be kind of a wrecking ball speech about basically Europe, you're on your own. What do you expect to hear from J.D. Vance? And specifically, as the CEO of Saab, what are you listening for that is going to change your perspective on what you do?
No, you're absolutely right. Of course, you're listening to how much of an own responsibility do we have to take in the European context. That's sort of what you're listening to. You're listening to the support to NATO and how important the alliance is. That's incredibly important. And also the reciprocal type of trade between European defense companies and US. Will we have an option to actually build our capability in the US, and should we have the same reciprocal setup for US companies in Europe? Those things I'm listening to, of course.
Of course, reciprocal these days is being used not to have more trade, but potentially less trade in terms of reciprocal tariffs. How is the tariff story affecting you, how you're thinking about your business?
Yeah, of course, we're monitoring that. Trade war is never good. But I would say also we are a little bit more of a more lead time as a company because we have a little bit more in stock, and then we have sort of regionalized our supply chains to a large extent. So we're not depending on a certain hub somewhere in the world to say, get all our stuff into building platforms. But of course, I mean, over time, this is not good.
But meanwhile, you're also looking at expanding your footprint in terms of production capacity. Where could we see new sites from Saab over the next couple of years? I know Ukraine is a site that you're looking at right now.
No, absolutely. I think we're moving from donation from countries, from us delivering into Ukraine to setting up support and maintenance of stuff, and then finding partnerships to actually establish both development and production capability in Ukraine. We have to do that, and we have to help them build sovereign capacity going forward. That's what we're doing.
And in terms of the impact of the Trump administration, specifically on domestic economic activity in the United States, there's a lot of euphoria within the market. Could you see yourself expanding as a consequence of the Trump presidency, your footprint in the United States?
No, absolutely. We took decisions like that independently of administration last year. We're building a new facility in Michigan, Grayling.
Does it make it more attractive now?
Maybe, I would say so. U.S. is a growing market to us, and we are investing heavily to boost capacity in the U.S., and it's good because we need redundancy, and the U.S. is a big market, of course, and also great support for export.
And then in terms of trying to build capacity out in Europe and other countries, what capitals are you talking to? What countries are trying to attract you to build your next sort of production
Well,
site?
you look at your main customer countries, of course. I mean, in Europe it would be UK, of course it would be Germany, it's Poland, but also a few others. Main customer countries where we build mini Saabs, not the full portfolio, but things where we have established sort of a good customer relationship.
And you have a huge portfolio of different products. When you're looking at your portfolio, you're looking at the demand for years to come. What's missing for you right now? What are you looking at in terms of possible M&A, where you need to build out your footprint?
But as everyone else, and we think we're still an agile company, we, of course, embrace new technologies to make more autonomous systems. That's absolutely going to be the future, independently of domain, in the air domain, subsea domain, and surface domain at sea. And I think things like that and taking care of the critical underwater infrastructure things are really in focus for me now, to bring expertise in, to take shortcuts into that sort of market.
So what does that look like? You're talking about patrolling sort of undersea, because obviously the undersea cable is something that's a huge concern for Sweden and for the, so you're looking at sort of autonomous drones that operate underwater?
Yeah, we have autonomous and remotely operated vehicles today. We can put them being resident underwater and sort of turn them to life when they're needed to monitor something. And we can put sensor technology on them to actually see what's happening at the surface level, but also subsea. So that can be done. The question is, who is the customer? Because, I mean, these cables are owned by certain companies or countries, and it's not obviously the defense who is the customer to us. So that needs to be sorted as well.
Right. And then also another sort of factor of having all of these products and all of this, you also have huge volumes of data, and you have a lot of, you have sort of eyes all over the battlefield. Is there a sort of, who are your partners for trying to look at analyzing that data? I'm thinking about AI. I spoke to the top general for the Germans yesterday saying that basically if, the West falls behind on AI, it could be a massive risk for the military industry and for their own defense. How do you see that, and how do you attach that? How do you attack that? How do you get the sort of AI integrated into it?
No, you're right. I mean, it's a bit sort of like islands today. Of course, we have our data centers, you would say, based on the platforms that we have with lots of sensors and things on them. But you need to take it down another step. I mean, as countries, NATO, creating a cloud-based sort of protected environment, secure environment to share data, and that are decisions that are still need to be made in different countries around it, including Sweden. But we're getting there, I think. It will need partnerships.
And when you walk away from this conference at the end, by the end of this weekend, what do you hope to know more about and make your sort of to inform your decisions that you're going to be making?
I hope to see that it's for real, that Europe decides to step up, at least the majority of the countries, so we actually get things going on spending for common flagship projects. That would be great to hear, that we're not sort of hesitating now and having this consensus sort of way of looking at things, spreading our money over all 27 countries. We should sort of realize that we have some countries with really good defense industries that can help quickly boost capacity and capability in Europe. I mean, because we need that independently of administration in the US. We will have the Russian aggressor to our east and not being predictable for a long time. So we have to realize that. Some countries do, some countries don't.
Well, Michael Johansson, thank you so much for your time today. That is the CEO of Saab here at the Munich Security Conference, dealing with the great uncertainty that is coming, yes, from the Trump administration. Could some of that certainty, though, be coming from the Europeans? That's what he hopes to learn today here at the Munich Security Conference.
Oliver Cook there with the CEO of Saab, of course, at the Munich Security Conference. We thank you so much. Coming up on the program, we're going to stick with the corporate theme, optimism from the French telecoms giant Orange as it returns to profit in its home market. We'll be joined in the studio by the CEO next. Stick with us. This is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Hub's earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. This is the opening trade. It's Friday. It's Valentine's Day. There's red on the screen. I'm not sure if that's appropriate or not. Stocks are a little in retreat this morning, down 0.2%. The CAC 40 is actually flat, though, and that's being lifted by the luxury sector. So Hermes and the strong results at the luxury sector boosting that market. But, Chrissy, we need to go to a different sector within the French market.
Different colour as well.
No love for stocks.
Let's not argue about whether this is orange or red, because this has been going on for a long time.
That's why you have to wear purple.
This morning it's orange.
Well, let's stick with another stock here, another corporate stock. Telecoms operator Orange has forecast improved earnings growth this year after profits rebounded in France, its biggest market. The company has resisted cutting prices in its home market, positioning itself as a premium service. The CEO, I'm pleased to say, of Orange, Christel Heidemann, joins us in the studio for an exclusive interview. It's lovely to see you here in London. Thank you for coming by. Good morning. Look, these numbers were really strong yesterday, and even the analyst community had said, wow, this is kind of coming out of nowhere. What do you attribute that strength to?
Well, we've been focusing for the past 2 years on our Lead the Future plan, on execution and on, fixing some of the issues we had, but also leveraging the great assets that we have. We have fiber everywhere across Europe. We have a fantastic presence in Africa, fast-growing market. So we really operate in the European environment on next-generation network, benefiting from our fiber coverage. We are the leader in Europe. And, of course, Europeans are adopting broadband. We have cybersecurity business growing as well. So we've been benefiting from all, I would say, our top priorities, and that's the execution of our strategic plan.
Well, talk to us a little bit then about how that shows up in the context of perhaps some of your other peers based in France cutting a little bit of costs, worried about the political environment, worried about the geopolitical environment. You seem to be going against the grain in that backdrop.
Well, the solid results in France are first and foremost the result of excellent commercial performance. And our teams, our customers, we have the best NPS, we have the best network quality, we have the lowest churn on the market, and that's the key in very mature market like telecoms these days in Europe. Of course, we have the average revenue per user increasing. We're benefiting from customers migrating from copper to fiber, and there's a premium when customers buy fiber. So that's been driving growth, and that's the first and foremost priority for us. Of course, we continue to drive efficiency. Actually, we've been talking a lot about AI as well. This week, AI was everywhere.
Yes.
But in the company, we really use AI first and foremost to empower and augment our employees. And we've said it yesterday, in 2024, AI was for us 200 million euro of value across the company. And it's a mix of more revenues when we do customer value management and we optimize our footprint. And it's also, of course, cost efficiency.
Okay.
So all of that is in the results that we've announced probably yesterday in 24 hours.
And that all sounds like it costs a lot of money to investing in AI, investing in a lot of infrastructure, then Christel. And I wonder what pricing power businesses like yours have for various types of customers, because sometimes I feel maybe we take for granted the phone in our pocket that will work when we need it to, or business customers perhaps need their, do so as well. So what constitutes, how do you have premium pricing power in this industry?
Well, for a long time at Orange, we've been focusing on what we call convergent customers. And obviously, we have all type of offers. Our cheapest offers, and this is somehow crazy in Europe if you realize that the price of a mobile monthly package is the price of a burger these days. When you realize how essential it is for us to have connectivity, nobody can work, live, without mobile connectivity. So this is very cheap. We invest billions, actually more than 6 billion every year in our networks. I think we take it for granted. We've been doing, fiber rollout across Europe. This is like tens of billions of euros that we've been investing. So this is it. Now it's true that we offer all type of packages. We have customers who really want the premium packages because they consume a lot of data, they travel, they want, reliable fiber. But we also have, students who need a low-cost package. So we want to offer everything. We've been doing during inflation time some, price increase, but this is not mechanical anymore. So we really play on volume and value. we've been offering for customers some cybersecurity offers. This is working as well. So there's not one size-fits-all solution.
My experience with students is they tend to use their phones more than maybe we do.
Anybody else?
Is there too much competition, though, in Europe that actually we're not investing enough? This is an industry, like so many industries in Europe at the moment, there's this complaint about regulation. There's this complaint about the fact that we need scale. You talk about it in the banking sector. We've just been having a conversation about the Munich Security Conference about the fact we need consolidation within the defense space. Do we need consolidation within the mobile space, within the telco space, in order to provide the investment that Europe digitally needs right now?
We do need consolidation. Actually, Orange, we've been doing it actively.
Sure.
We've been driving consolidation nationally.
How much more do we need? How much does it need to accelerate?
You look at the European Union has said it. There's a telecom report that says we're missing 200 billion euro of investment by 2030 if we want to bring 5G and fiber to all Europeans.
And consolidation will solve that problem?
And consolidation will solve that because we are a fixed cost business. So if you're the number one in a country, you have more ability to invest than if you're the number 3 or the number 4. And in some countries, we have 5 operators. Think about it. In the US, there's only 3 mobile operators. In China, 3 mobile operators. In Europe, we have 27 countries, and we have at least 4 operators in every country.
And regardless of how many operators there are, there's a lot of infrastructure to invest in. And I know the industry, under what we called fair share rules, has been trying to argue that tech companies need to pay more because they benefit when you provide broadband to somebody's home, for example, or someone's phone. So that didn't get anywhere. But I wonder, with the AI theme growing and growing and growing, do you push for that again in the sector?
Well, it's not about, what we want as an industry is to make sure that when we invest for the network, it's us deciding to invest for our customers. The challenge that we have today is that some of the platforms and the big platforms are driving so much traffic on our networks that we are forced to investing just for them to continue to grow because their business model is based on more traffic. So that's the issue. Now with AI, we believe there's going to be a new paradigm because AI today, everyone is talking about the hyperscalers and the huge data centers. The reality is that AI, if we think about AI at scale, AI will happen on your mobile phone, in the cars, in hospitals. So it's going to happen at the edge. And the inference of AI will put some pressure on our networks. The traffic generated by AI will be very different from the video traffic. So we're convinced there's going to be a new...
Are you already seeing it? Is there already a pickup?
No, for the timing, we don't see the impact of AI on our networks, but we want to be ready. And we want to make sure that we're building the right business model so that this time we don't miss the opportunity to capture value from AI adoption for our customers.
Nice to see you. Thanks for stopping by to come and see us. Christel Hayden, CEO of Orange. Coming up, Emma's sales are jumping. The company has pricing power. Europe is certainly seeing a luxury. It's Valentine's Day. Maybe luxury should be up today. I don't know. Apparently jewelry sales go up on a day like today. More on that next. This is Bloomberg.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
This is the opening trade. We're about 30 minutes into today's session. Seeing some, I want to say marginal moves, a little bit of volatility in the German index, I think, is the where to look. Down about 0.3%. It could just be a little bit of risk off ahead of the weekend, as Guy mentioned earlier. It could also simply be a rotation of what we've seen throughout the rest of the week. A string of good days for Europe, even better days for the DAX. Maybe, Guy, just a little bit of a reversal today.
Yeah, and Europe's had a really good run, as you say. Maybe a little bit of that's coming out of the market. Let me just quickly check and see what Hermes is doing this morning, because at the get-go, it was up quite strongly. We've faded that move a little bit. We're up by around 3% right now. Sales jumping almost 18% in the fourth quarter. That certainly beats most analysts' estimates. Joining us now for more on what this means for the luxury sector, and we've also had Moncler out with numbers as well as Andrea Felsted from Bloomberg Opinion. Morning. Why does Hermes have pricing power?
Hermes is very different from anybody else in that it can basically dictate its own level of demand because it has capacity constraints. There are waiting lists for its most in-demand products, mainly the Birkin bag and the Kelly. So in tough times, it just works through that list.
Has it raised prices as aggressively as others? Does it have it more in the time? Because everything else kind of felt like it went up really quickly. Obviously, I follow this stuff very carefully. It went up very, very quickly. Did Hermes deliver that same punch in terms of the price?
No, Hermes' products are very expensive. You're looking around $10,000 for a Birkin, roughly.
Yeah.
It didn't actually push up prices as aggressively as others. Also, it's worth remembering that if you want a Birkin right now, you can't just go in a store and buy one.
Yep.
You have to register for interest, see whether the store gets
like
the model you want. Yeah, basically. Probably a bit rarer than a Rolex. But if you wanted to say, I've got to have a Birkin right now, you can go to a resale site. You will pay double in the store. So the fact that it didn't push up prices quite as aggressively as others, plus that the differential with resale means that it's probably one of the few that's still got some pricing power.
Well, talk to us about what that hit looks like in terms of the tariff story, because guys right in that it has the extra pricing power. You're seeing the CEOs talk about the fact that they could increase their prices in response to tariffs. But can you just quantify what that tariff impact might look like on Hermes' business?
Well, I mean, we don't know what tariffs are going to be. I think Hermes is one of the few that could put prices up. Customers would wear it, literally. For many of the others, I think it's going to be very tough. If this was 5 years ago, I would be here saying luxury goods haven't got anything to worry about with tariffs. Their customers are wealthy. They can put up prices. It's going to be no issue. They have raised prices so aggressively over the past 5 years, that ability to raise prices more is really not there. It's going to be a real struggle unless we have another boom to raise prices as they did before.
I mean, it's all very unpredictable, isn't it? I wonder if there are wealthy women in America getting in Trump's ear and saying, just not handbags. Just not handbags.
Don't touch those.
Let's talk about the China story, shall we, in the context of Hermes, because it's complex to work out what's going on in China. So the CEO, Axel Dumas, saying it's too soon to talk about a China demand recovery, but are there green shoots?
Well, Moncler actually was more upbeat about China. The feeling from the results that have come through recently is China's not getting any worse. It's not clear whether it's getting better or not. We've just had Chinese New Year, so we've got to sort of, I think, get through that to see what the underlying picture of demand is.
What do these companies do with gold prices? Do they buy forward? Do they hedge? Because gold just keeps going up and up and up. Precious metals keep going up and up and up.
That is definitely an issue for them. It's something that hurt Swatch a few years ago. It has inventories that are sort of very valuable. But I guess they just have to deal with it. And if it does go up, they'll have to reflect that in the prices.
So do they have big inventories of gold, silver, whatever it is?
Well, Swatch has very big inventories, some of which are precious metals. And that's been a real thing. Value of inventories is about the same value as the company.
So I can revalue these luxury. Every time gold ticks higher, basically, in theory, luxury stocks should be moving higher as well.
I'm not sure about that because I think generally raw material is quite a small part of the overall
if you've got a big load of it in the bank or in the vault, then presumably it's worth more on a daily. I'm just curious.
Presumably it is, but I think translating that into sales and into products.
They've also got to tell us how much they've got.
Yeah, which many don't. Swatch, I'm not really up on this, but I know Swatch is one of the few that puts out its inventories.
They're going to have to call you up and get you to consult on some of their gold strategy.
All I know is that every day gold seems to be going higher and higher and higher. These companies use a lot of it.
Do they market to market? Do they mark to market, I wonder?
Yeah, exactly. A bit like the US Treasury, or not.
Bloomberg Opinions, Andrea Felstead, walking us through all of Guy's questions.
Yeah, sorry. Probably took you down a rabbit hole you didn't really expect. What else do you need to know this morning? Let's turn to SaferGrand. What is happening with the technology sector? Shares in ARM Holdings have jumped on a Financial Times report that it's landed Meta as an early customer for its first in-house chip. ARM will reportedly unveil the first chip to be sold under its own brand as soon as mid-year. Let's call it mid-year. ARM is best known, of course, as a chip designer, licensing its technology to others instead of making its own products. Bloomberg has learned that China has invited prominent entrepreneurs, including the founder of DeepSeek and Alibaba's Jack Ma, to meet the nation's top leaders, a potentially momentous show of support for the private sector after years of turmoil. Sources tell us that President Xi Jinping is expected to attend and meet and the meeting may happen as soon as next week. Bloomberg has also learned that Apple is working to bring its AI features to iPhones in China by the middle of this year with a launch maybe mid-May we're talking about. The company is relying on local partners like Alibaba and Baidu to adapt its Apple Intelligence platform for the region. The rollout is, of course, a high-pressure task for Apple, which has suffered a steep sales decline in China, its biggest single market outside of the United States. We should also talk about TikTok. There's Reddit. Reddit is a really interesting story as well, which I think is, I quite like to talk about that too.
The fact that Apple is partnering with Chinese large cap companies when 4 years ago they were targeted from the Chinese administration under trying to get the Huawei smartphone kind of to be the major player there, which it still is, but Apple was trying to eat into that. But then also really having to talk to Donald Trump and kind of getting in his ear in his first administration and saying, don't do this tariff stuff. Don't kind of change our supply chains. They even had to react and move a lot of it to India outside of China. This feels like a 180 for Apple. And now on top of that, with the TikTok story, TikTok is coming back on Apple stores. It's not legal yet, but it is.
Yeah, Pam Bondi apparently has said it's okay, so
yeah,
they're going to do it. And also, the longer it's off, the more problematic it is to sell, I'm assuming.
Yes, and we don't know yet, do we? Still don't know who's going to buy that. And Elon Musk perhaps distancing himself a little bit from that. Shall we talk about that Reddit story? I think that is fascinating. So we remember during the meme stock craze that Reddit was everywhere, and plenty of people were on Reddit talking about financial markets. They still are, of course. And we followed all the ups and downs from crypto and beyond. And now we've got a tool, an exchange, the International Exchange is going to be partnering with Reddit to try and bring that as a sentiment indicator as to where consumers are at to the markets.
Well, retail investors, they basically get to tag it all and allow you to plug it into your algorithm. This is so ironic, in as much as the Reddit crew were the antithesis of the kind of traditional, particularly the short-only side of the investment industry.
Yeah.
And now the investment industry's gone.
Yeah,
no.
they had big hedge funds in their sites, and now the big hedge funds have Reddit in their sites, saying, well, you're useful.
But you won't be able to use it the ability of the professional financial industry now to react and monitor is much greater, i.e. they're solving that blind spot that they had that cost so many funds so much money.
React and monitor, but then on the other side, there's an opportunity almost to manipulate the market as well. So I wonder how quickly there is a regulation standpoint that has to come to this now that you can basically swing the sentiment indicator.
Well, yeah, can you swing a sentiment indicator using only emojis? That's what I'd like to know, because it was all about diamond hands and rockets and moons and all of that. Something to do with chicken that escapes that I can't remember. But anyway,
so some sort of translation feature probably.
Yeah, absolutely. And then I started
We're clearly of the times.
then I started wondering whether you need this in a day. AI would love to do this for you as well, wouldn't it? Various AI tools would love to do that. But then they'd have to have the access and the large data sets. But that's an interesting.
But we already have kind of models that effectively screen speeches, that screen pretty much everything, tag it, give you a sentiment, give you a readout. Was that hawkish? Was that dovish? Effectively, this is just applying some of the same technology to what is happening on Reddit. But again, it speaks to the power of these data sources and where value lies. Is a company like Reddit more valuable now because it's able to harness this? But then how do its users feel about the fact that Reddit is doing this, and will this ultimately therefore prove to be a negative?
But I also want to know how I don't know if you spend as much time as I do interpreting messages, for example, but if I get hypothetically...
Very little.
Probably. But if I get a text message from someone, I don't fully know what it means or what the sentiment is or whether it's just, a quick response or something more.
You're definitely overthinking.
No, but this is how people think on social media. You should get on it sometime. Figure it out.
You'll be welcome, apparently, guys.
The read-through is my point, is that it's open to interpretation, so it's not a science.
But don't understand it, just ignore it. That seems to be the strategy.
Adulthood.
Yeah. It's very simple, very straightforward. Okay, talking of a lack of understanding, the Trump administration telling its European allies to buy American weapons in order to maintain the NATO alliance. We're going to discuss this next with Keir Giles from Chatham House. That's next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Welcome back to the opening trade. We're 45 minutes into today's session. These feel like muted moves to me. I am starting to see some underperformance. It went from Germany to the UK. The UK is now your underperformer of the region. FTSE 100 down about 0.4%. If you're looking for a moment of optimism, though, perhaps it's in the French numbers. A lot of that driven by the luxury story. Good numbers coming out of Moncler and Hermes as well. That index higher by 0.1%. A good chunk of that, though, exposed perhaps to the United States and the tariff story. Let's go there next. The U.S. President Donald Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners. The development raising the prospect of a wider campaign against a global system that he complains is tilted against the United States. Bloomberg's Brendan Murray, I'm sure, has his head spinning. He heads up our trades coverage and is joining us now. Brendan, this is tricky in so many ways. The math around it is hard, but I think what stood out to me was that it's not just what countries have tariffs on the states. It's also using what he calls non-tariff barriers, things like regulation, VAT, et cetera. How do you quantify that?
Yeah, I mean, if Trump's favorite word is tariff, it seems like his second and third favorite words are taxes and regulation. So he announced yesterday a process by which his administration will investigate and review the trading relationships with all sorts of different countries. They're going to start with the ones that have the biggest trade deficit, trade surpluses with the U.S. And he's going to sit down at the table and say, okay, let's talk about tariffs, but also let's talk about these other things, these other measures that you have in place that we think disadvantage our exporters. So that just opens up a whole Pandora's box of issues, from value-added taxes to environmental regulations to food standards. It's all kind of on the table now.
Anna wants to talk about VAT. I'm going to leave that to her in just a moment. Brendan, this sounds epically convoluted and difficult. And is it going anywhere as a result of that? And the market's the consensus seemed to be yesterday, he's bitten off more than he can chew. We're not going to see this happen. Is that the right reaction?
Yeah, I think that as we've seen in just less than 4 weeks of this administration, there's a big announcement. It makes a big splash. Everybody starts to wonder what this all means, and then the process behind it takes over, and something more measured is where we end up. I think that's probably the case here. If I were the European Union this morning, they're probably waking up and going, what are we going to do now? Because they had their list of things that they could retaliate against U.S. products. But now, if all these other things are on the table, then that just changes the ball game, really. So part of Donald Trump's strategy is to kind of confuse and sow disruption, but that's by design. And so we'll see how it plays out. But if you have a big trade surplus with the U.S. today, you're going to be looking very closely at how they wind up, how this review winds up in 6 to 8 weeks.
Yeah, that's interesting. Even if you're a place that doesn't have a very big differential in terms of percentage tariffs, one versus the other, US versus your own trade. Let me ask you about VAT. As Guy said, I did go down a rabbit hole on this. So what is President Trump's What is his problem with VAT? Is it that the companies that export from Europe get what you might call a VAT exemption because they're not actually selling it to a customer, it's going to a different country? Or is it something to do with the fact that European manufacturers can recover some of their input VAT costs? I mean, Brendan, have you got answers on this?
I wish I did, but I think both of those things will be part of the discussion. The Europeans will most certainly argue that a VAT is tariff neutral. It doesn't disadvantage the U.S. But this has long been an issue that Trump's advisors now, Peter Navarro, he has a commerce secretary who's coming in who's also shared these issues. That they are definitely going to sit down and debate. It's an open question as to whether this disadvantages the American companies, and so we'll see how it ends up. But they're definitely convinced themselves that they have leverage in this department.
To be fair, I'm not sure I'm a big fan of VAT either, but we'll park that one for the moment. Brendan, great stuff. Thank you very much indeed. Bloomberg's Brendan Murray.
Let's stick with themes coming out of the White House right now. The Trump administration is said to have told European allies they should buy American weapons and military equipment in order to maintain the NATO alliance. This clearly would also help the trade balance, referencing our previous conversation. Perhaps part of President Trump's transactional approach to U.S. allies. Joining us now to discuss what we have learned about the Trump administration and its approach to defense and NATO, Keir Giles, author of Who Will Defend Europe? An Awakened Russia and a Sleeping Continent. He's also Senior Consulting Fellow of the Russia and Eurasia Programme at Chatham House. Keir, really good to have you with us on the programme, and a really serious topic that we need to dig into. So are there security arrangements that we can put in place around Ukraine in some kind of peace deal that will be effective, Keir, that don't involve US boots on the ground? Because I'm trying to find an answer to that question.
Well, yes, as you heard Brendan saying just now, you've probably got European leaders this morning scrambling and saying, what are we going to do now in the face of whatever might come out next from the White House? Now, there's long been a consensus that you do need U.S. support as the military heavyweight to make any kind of security guarantee for the eastern frontier of Europe to actually be realistic and to stand a chance of deterring Russia. Now that has been taken off the table preemptively and a concession made to Russia, even in advance of any peace negotiations for Ukraine starting, it leaves an enormous gap in any realistic deterrent. And so, of course, the conversations now are about exactly how you can make that up. And it's not looking good in terms of the capacity of European militaries to fill that gap after they have spent 30 years drawing down their forces.
It feels like we've got a duration mismatch. Europe wants to have a bigger military presence, but in order to do that, you need to have a bigger industry to support that military presence. In the meantime, we can buy from America, but then you kind of undermine the case for long-term investment in Europe. Should we buy from the US now and invest for the future? Does that work as a plan?
It might work as a plan, especially since we're now faced with an emergency situation and countries are paying the bill for having ignored this problem for so long. It is inevitably going to be vastly more costly than if defense industry and military capacity had been maintained, or even if rearmament had stepped up a decade ago when the need was already clear. But the other aspect of this, of course, is that, ironically, the actions of the US government will have made European countries slightly more wary about buying American. And that's not just the Trump administration, it's also previously under Biden. Countries that are on the front line look at the restrictions that the United States put in place for how Ukraine could use Western-supplied and American-backed weapon systems for defending itself against Russia, and the inevitable question is, would the United States do the same to us if we, as ourselves, were under attack from Russia as well? So there are all kinds of now new caveats and new hesitancies and new factors in play about deciding where and how to purchase your weapons.
Well, Keir, what does this do, just big picture here, when it comes to the attitude towards Russia? I mean, is the United States setting a tone, basically, where it had a sticking point in other countries in that relationship with Russia? I'm thinking of India, for example. Is that tone shifting? Is it getting easier for countries, not just in Europe, but around the world, to do business with Russia because the U.S.'s mood and approach has changed?
It certainly seems that way. Now, the headlines, of course, have been about throwing Ukraine under the bus and all of these preemptive concessions to Russia, essentially meeting all of Putin's demands at the same time as negotiating over the heads of the Ukrainians. But there are broader aspects to this as well that are alarming not just Europeans, but people around the world who are next door to larger aggressive neighbors. And that's the attempt at rehabilitating Russia. It's the discussions about lifting sanctions. It's the talk about the mutual visits between Trump and Putin. If the United States plays host to an internationally wanted war criminal, that's only going to encourage more bad people around the world to assume that they too can have their day.
Can I ask you about NATO? I know we've touched on this already, Keir, but a little more, because, of course, we have Article 5, and rules about NATO are written down, and members are supposed to sign up to them. But you make the point in your notes ahead of this conversation that actually NATO is as fragile as the spirit of NATO. How alive is the spirit of NATO with President Trump and J.D. Vance and everything we've learned from them so far?
That's been a startling turnaround, of course. You have the United States moving suddenly from being the core and the backbone of NATO unity and the underpinning of it to being its biggest challenge, to actually mounting direct challenges to its allies in North America. Canada now and Denmark looking at a sudden security challenge from behind the lines as opposed to looking towards the front and dealing with Russia. So it's thrown a huge question mark over exactly what the commitment of the United States as that core, as that strongest member of NATO, would in fact be if it were tested. And that's when you look at the Article 5 of the North Atlantic Treaty that you mentioned, the idea that an attack against one member is an attack against all, but you have to read to the end of that and understand that in order to meet its obligations under that treaty, the United States doesn't actually have to do anything at all. It can deem it not necessary.
Okay, let's talk about the kind of the nuts and bolts of how Europe rearms. Do we need an Airbus of defence? Do we need system consolidation or do we need corporate consolidation? Is MBDA the right model? And how do you solve the labour problem as well? It is hard to recruit soldiers, sailors, airmen right now into European armed forces. Just walk me through the mechanics of getting this all done.
Now, let me stress absolutely, I'm not a defense industry expert. I can see the gaps in the armed forces. Filling them is not my area. But what we can see is that over the last 2 decades, we've had calls for precisely this kind of response to the gaps that are in European defense capacity. And there has been alarm across so many different countries about the way core industries like steel, like explosives, everything that you need to actually supply a military have been eroded one by one. So there is so little capacity across the continent and dependence on countries overseas, which may not necessarily be friendly disposed towards Europe in a time of a crisis. So all of that needs rebuilding on a very, very fundamental level in advance to the any grand plans for international cooperation there may be. It's got to be part of a comprehensive package of rebuilding things that have been steadily demolished over the last 3 decades.
Keir Giles, plenty of things to digest with you. We thank you so much for your time this morning. Senior Consulting Fellow of the Russia and Eurasia Program over at Chatham House. Plenty to watch ahead in terms of the trading agenda. And your day book today, you've got 10 a.m. UK time, Euro area GDP, 1:30 p.m. UK time, the focus on the States, U.S. retail sales, followed out about 45 minutes later by industrial production, and then some comments out of the Fed's Lori Logan later. But I think the highlight is that it's Valentine's Day.
Yeah.
But it's also retail sales.
There we
so
go.
America spending a lot on... The numbers are quite staggering. Like, I don't have them to my fingertips because I'm not paying that much attention. But I understand that there will be people out there spending money today.
You don't care that much how much Americans spend on jewellery.
I bought a card.
Well, that's
as far as we go.
That is excellent. And there's still time to buy the chocolates on the way home, I'd just say. Yes, there is. I mean, what have we got on our list then? There's plenty. Oh, there were some cultural
film festivals.
activities.
There's very little sport this weekend.
Little sport. White Lotus is out, apparently. Although Bridget Jones, that new movie, seems a little more romantic and Valentine's-y to me than White Lotus.
The Berlin International Film Festival. Come on, guys. Huge. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live from the Munich Security Conference today. These are your top stories. The future of Ukraine hangs in the balance here in Munich as European leaders consider their role in negotiations after Donald Trump's phone call to Vladimir Putin. A 50% cut in defense spending. Donald Trump floats the idea of a deal with Russia and China as a way to radically reduce military budgets. Plus, signs of tariff fatigue, while Bloomberg's dollar index actually slides to a 2-month low as investors wind back bets that President Trump will ramp up levies. Well, we have a really packed show. We have a host of top guests this hour, including the Singaporean Defense Minister, the EU's Economy Commissioner, Valdis Dombrovskis, and then, of course, a little bit later on, we also have a great panel here at the Munich Security Conference on the future of the U.S.-Ukraine security cooperation with the Ukrainian President Volodymyr Zelensky and U.S. senators, including Lindsey Graham, Jen Shaheen, and John Cornyn. So there's quite a lot going on here in Munich. Donald Trump setting the wheels in motion for peace talks between Russia and Ukraine, starting with his call with Vladimir Putin. This, of course, has left European officials feeling blindsided, with concerns being raised about their ability to shoulder the cost of supporting Kyiv through negotiations and rebuilding Ukraine's military. Well, I'm delighted to be joined by Anya Manuel, former diplomat and executive director now of the Aspen Security Forum. Anya, as always, thank you so much for trying to make us smarter on all of the diplomacy that's going on behind the scenes. Do you worry? Is this a historic moment for cooperation between the U.S. and Europe?
This is a historic moment. It may not be cooperative immediately, but I do think you need to, everyone should take a step back here at the Munich Security Conference, and instead of focusing on the minute-by-minute headlines coming out of Washington, and I understand there are a lot of them, focus on the trends that are consistent. And I'd give you 3 important ones. 1, from previous presidents to Biden to now President Trump, there has been a call by Americans to say our allies must do more. We cannot do these long, faraway wars by ourselves. The American people are sick of it. We're going to need the allies to step up. That's okay. Trump may say it less diplomatically, but it's a trend that continues. So that's 1. 2, our southern border needs to be secure. Immigration has really become an issue. It's now a bipartisan issue. So to the extent that you hear the president talk about immigration issues, those things are going to be ongoing. And three, I know there's a lot of talk about Russia here. China is front of mind for a lot of people in foreign policy circles in the United States, and continues to be a bipartisan, fairly hawkish consensus on China. There's real worries that under Xi Jinping, China has become increasingly authoritarian, increasingly pushing out of its boundaries in a way that worries all of us.
And there's very clear anxiousness amongst European leaders that actually the U.S. with Russia will redraw the map. And this is being zoned in on when it comes to Ukraine. We're seeing conflicting messages, frankly, from the Trump administration, depending on who you speak to. Does it take time for real policy to come through? Like, how do you cut through the noise?
Yeah, every administration, the beginnings of an administration are really complicated. No one is in their seats yet. There are a lot of really good people that are going into the Trump foreign policy establishment. Marco Rubio, head of CIA, Mike Waltz, who's running the National Security Council, Keith Kellogg, who's here leading on Ukraine. Those are really good, smart, seasoned people, very thoughtful. The president is someone who likes to make big announcements and then see if a deal can get done. So I think you're seeing here a lot of announcements being made, but behind the scenes, I think you'll see some more careful and thoughtful diplomacy.
We're also expecting at 2 p.m. the speech by J.D. Vance. It's very difficult to know what's in it. But again, there's a murmur in the corridors at the Munich Security Conference that it will be more like a wrecking ball. Can Europe and NATO still count on the U.S. as a key ally?
Of course you can count on the United States as a key ally, but alliances are a real partnership. And I think president after president has said, look, we're spending 3.5% of our GDP on military European countries. We've gotten more countries to 2%, but boy, we're not quite where we need to be. So the Trump administration will say it more aggressively than maybe a previous administration would have. But the sense remains the same, that if it's going to be an alliance and a partnership, it needs to be a true partnership.
Anya, I know you spend a lot of time trying to understand China's thinking in all of this. How are they looking at this conversation between Russia and the U.S.? How are they looking at Ukraine and the Middle East?
Well, I wouldn't want to speak for the Chinese. They're here. I'm sure you'll be interviewing them. When Chinese officials have spoken to me in the last few weeks, trying to figure out how to approach this new administration, I have said what I would say here, which is help us. There doesn't need to be a war in Ukraine that's killing hundreds of thousands of people. China is a big power on the world stage. They can use that power for good. And if they can use their good offices behind the scenes to get a lasting, sustainable peace that's right for the Ukrainian people, then that's a good thing.
You know what I feel is very different from other administrations is that between the deal and diplomacy, there's quite a fine line. So you don't really know ever what the end game is. Like we've seen, with Greenland, what we've seen with maybe minerals in Ukraine. How do you navigate that?
I think in all of these pronouncements, there's a core element of truth. And that's the thing to focus on. So if you talk about Greenland, all the headlines were, Trump wants to take over Greenland. I think when you dig beneath the surface, there's a real concern in the Arctic about what the Russians and the Chinese in particular are doing. I think the Russians have dozens of icebreakers. I think the U.S. and NATO together have something like 2. There are real concerns about security. There are real concerns about critical minerals and where are we going to get them if the Chinese keep cutting off our supply. So if you look instead of where the ball is bouncing, but where the broad trajectory is, I think we can get to some reasonable solutions.
Where do you think Europe can actually either push back or negotiate? This is a region that is extremely splintered.
Yes.
You have elections in a couple of weeks in Germany. France is also kind of on the brink. How difficult is it going to be to have a united front?
It is difficult, but I hope we don't see it as a U.S. front versus a Europe front. I think we are often separated by the tyranny of petty differences. There's so much that the U.S. and Europe have in common, even with the Trump administration, which I know is difficult for some Europeans. But if you look at, for example, I gave you 3 big trends that are consistent. A fourth one is technology is going to continue to be front and center. J.D. Vance comes from the technology world. A lot of people going into the Trump administration come from that world. And there's an area where the U.S. and Europe could do more to collaborate, building out these data centers, building out the AI ecosystem that we all need the US and Europe together.
And do you think on AI, it's going to be a real race between the US and China, especially after the news a couple of weeks ago on DeepSeek?
That is the current race. There are a lot of others. I live out in Silicon Valley, so I see this up close. Wow, this technology is moving really quickly. It's moving really quickly in the US, in the Middle East, in China, in France, in certain ways. So I wouldn't count Europe out of all this. And this isn't going to be a have and have-nots. This technology is going to be diffused to everyone and help everyone. The question for me is, how can we do it at speed, at scale, but also making sure we have really basic safeguards, like just the national security safeguards to ensure that AI doesn't intersect with bioweapons, chemical weapons, cyber in a way that makes us less safe.
But was DeepSeek, I mean, the timing of DeepSeek was actually quite convenient. Was it almost a message, a political message, a geopolitical message, because it's open source and it's kind of saying like, hey, don't disregard China right now?
Ah, interesting. Look, I don't know. What I've heard from Chinese friends and Chinese sources is that this wasn't a big Chinese government push to have DeepSeek. I think they were as surprised as the rest of the world was. And it just shows you how fast this technology is moving, how more and more is possible with less and less compute. By the way, DeepSeek wasn't trained on $5 million. That was maybe the final training run. So there's a lot that's still unknown. But no, I don't think this was the Chinese government saying, hey, look at us. They're running fast. We're running fast. The whole world is running fast.
Anya, thank you so much for joining us. I know you have to go to a panel. Anya Manuel there, the executive director at the Aspen Security Forum. Plenty more to come. We discussed Trump, tariffs, with Bloomberg's head of economics and government, Stephanie Flanders. That's next. And this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
On February 23rd, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in February 23rd, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back, everyone. Now, U.S. President Donald Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners. The development raises a prospect of a wider campaign against the global system that he says is tilted against the U.S. Now, Stephanie Flanders, Bloomberg's head of economics and government, joins us with the very latest. Stephanie, it's a good job you're head of government and economics. So two worlds are colliding more and more. What's the main message the Trump administration is trying to send to Europe and the world this week?
Well, I think we've seen in the last 48 hours he's just willing to and quite keen to turn things upside down in the space of a very short time. So even though we feel like it's been a very fast-moving first couple of weeks of the administration, we were expecting something from Ukraine, and then the sort of jaw-dropping nature of the developments overnight, and then to combine that with tariffs, which actually, if you're a European Union, this talk of the reciprocity and his talk about how the he views European value-added taxes and all countries that have value-added taxes as actually taxes on US exports, just the same as a tariff. That is a sort of dual threat to Europe. Not only is he saying, I'm going to cut you out of negotiations over Ukraine, but insist that you still pay for supporting Ukraine afterwards, I'm also going to pose this potentially very large threat in terms of tariffs. And I'm going to divide and rule. I think that's the other terrifying thing for them, that the way he's approaching this is very much looking to a country-by-country basis, which I think they've always been nervous about.
How difficult is it for Europe when you walk, this is my first Munich Security Conference, and actually when you walk the corridors, people are genuinely worried. They said, you know, J.D. Vance could be a wrecking ball in his speech today. We don't really know quite to expect. Do you think the Europeans can come together and if not fight back, at least negotiate as one?
I think I almost have this image in my mind. It's not even just coming together. It's like, who are you going to shove out the door to talk to him? Because that's the fundamental problem they have, right? They don't have, I mean, it's the old Kissinger question of if I want to talk to Europe, who do I call? But it's like, if I want to do a deal with Europe, what opposite number that I respect can I call? That's the kind of question that's coming out of Donald Trump. And it's fairly clear that, you know, Ursula von der Leyen has a very different style. She's not that person. Who is going to be if this is the way that Donald Trump wants to do deals, and they don't want to have the European Union be divided and doing individual deals, which I think in the economic realm Donald Trump might actually quite like, who is the one person who's going to speak for Europe?
I mean, to that famous, there's always that joke, you know, for the French position, press 1, from the German position, press 2, which makes it very, very complicated. Now, at Bloomberg Economics, which you also, of course, run, you're crunching numbers to give us a perspective of if these tariffs really are put in place or if they even go higher, what it means for GDP, but also defense spending if the U.S. pulls out.
Yes, and of course, we don't have clarity on what the numbers would be on the tariffs, but I think there's a sort of principle at stake here. I mean, remember, the way the global tax trading system has worked by and large over many decades is if you have one tariff against one country, it's also against every other country. If you start going country by country, which is, again, very much close to Donald Trump's way of doing things, you're looking at the specific set of tariffs and regulations that each country has. Now, broadly, our assessment, Maeva Cousin, our senior trade and Eurozone economist, has assessed that if he focuses just on tariffs, actually it's developing countries that will do very badly from this because they currently do have, for long-standing historical reasons, much higher tariffs against the US than the US has against them. If it's starting to talk about VAT, which we know from Bob Lighthizer book, advisor to Donald Trump, he cares very deeply about, then that could be another really big bill for Europe. And of course, we're calculating on top of that how much it would cost them to do all the stuff in defence that he wants. So this is shaping up to be a very expensive period for European governments if they take him at his word.
But is this a tool to negotiate, or does he also just want to get revenue for the U.S. economy?
I think when he starts talking about the reciprocity, although it's very complicated, you could see against an area like the European Union, there are very big numbers involved in terms of the amount of trade that goes transatlantic. And that does feel to me like a way of raising money, so as less of a negotiating ploy than a way of, what in his terms, levelling the playing field. There's been a long-standing feeling that VAT was a tax on US exporters in Europe and a subsidy for European exporters to the US.
I mean, there's defense spending and there's also the cost of rebuilding Ukraine. And it's unclear, you know, from the past couple of days what the U.S. position with Putin really is.
Well, and I think we've seen, if we just take at face value some of the things that President Trump appears to have said on his call, and what he's been saying in his messages to Europe is that they will not be paying for any of the US will not be paying for very much of it. There's a lot of different numbers flying around. We're certainly talking about hundreds of billions, maybe 200 or 300 billion for starters for the reconstruction of Ukraine. But if you don't have, I think people here, particularly at the Munich Security Conference, are very focused on the security of Ukraine first, because everything else follows from that. What are the security guarantees, and who is going to provide them?
Yeah, and we're 2 weeks away from this German election, and I think J.D. Vance was saying, look, European leaders also have to, if not engulf, try and promote free speech, and that includes the far-right parties. What does that mean?
Yeah, and we've seen that. I mean, of course, there was a lot of criticism of Elon Musk, who's the sort of unelected member of the administration, intervening in German politics earlier in the campaign. But to have J.D. Vance effectively also say, to try to speak to the German people over the heads of the leaders and say, you should be strong enough to take anything that comes through social media. You shouldn't be frightened of the views of your people. I think that, too, is something that is really scrambling European circuits. And we should remember that over this weekend, it's going to be the first time that Alternative für Deutschland is in a televised debate. So it's quite a moment for him to be talking about listening to their voice.
And Stephanie, what's the UK thinking right now? So how can they, bridge maybe a gap between Europe and the US, or do they just go it alone and try and find a bilateral with the US?
I think it's very difficult, certainly on the defence grounds, to genuinely go it alone, because they feel very strongly, and of course the UK has been one of the strongest partners for Ukraine from the start, under Boris Johnson and under others. But you do see, both on defence and on Europe, and on the tariffs, that the language coming from the UK is somewhat different. I think they feel they have a way of talking to Donald Trump, which is a sort of, that's an interesting argument, let's see about that, does it really apply to the UK, rather than the flat-out response that I think the European Union almost has to make because of the way it's designed. So I think you may find on things like tariffs that the UK does feel it's in a better place and will not be lining up with the Europeans. There won't be solidarity on that, but maybe more on Ukraine.
Stephanie, thank you so much. Stephanie Flanders there, who also has a great podcast called Trumponomics, and there's going to be a special edition for the Munich Security Conference. So I urge everyone to go and listen to that when it drops. Coming up, Apple's plan to bring its AI to China. We'll bring you the details next. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Alibaba's chairman says his company is one of the Chinese partners that Apple will use to bring AI technology to its iPhones in the region. Now, Robert Lee from our Bloomberg intelligence team joins us with the details. Hi, Robert. So how significant is this for both Alibaba and Apple?
Okay, well, it's clearly good for sentiment for both companies. If just address the points on Alibaba first. Alibaba is obviously most well known as being an e-commerce giant, both in China with various overseas operations as well. So if you look at their cloud business, it's slightly under 1/4 of their overall group revenue. And whilst I think there is some potential revenue upside, Apple is known for its tough negotiating stance. And I think probably the net impact on Alibaba's earnings is unlikely to be significant. You might not know that from the share price reaction, but in reality, I think it's a really, fairly marginal gain from them. On the Apple side, it's a step forward in terms of their China developments, but they are playing catch up. Most of the major Chinese brands have launched AI-enabled phones over the last 12 months or so. So Apple's actually coming from behind on that. But at least this development sort of clears the way for them to add Apple Intelligence into their China iPhones, and hopefully that should help stabilize their business. But it's a ruthless, cutthroat market in China. So as to whether it ignites a new round of growth for them remains to be seen, and is probably, I would say, less than likely.
Robert, will Apple Intelligence actually help transform the iPhone makers' prospects in China?
Again, smartphones these days are commoditized. If we had this conversation 15 years ago when they were in the ascendant, that would be a very different outlook. But it's commoditized technology. The local brands, in terms of their technological prowess, in terms of the functionality they offer, I mean, it's very, very strong. They're also very competitive on the cost front, and the software they offer and apps are obviously more attuned to the local population. So obviously, it's a very tribal thing when it comes to smartphones. If you're probably on the Apple ecosystem, you're on it for life almost. So I think, they're down to that sort of level at the moment, but it's going to be a tough ask for them to grow their market share and grow their business, given the, intensely competitive dynamics of the China market. It's not easy out there.
No. Yeah, it certainly is not easy. Robert Lee from Bloomberg Intelligence. Thank you so much. Now, coming up, let me tell you, we have great interviews over the next half an hour. We discuss Europe, U.S. with the former French Prime Minister, Dominique de Villepin. That interview is next, and this is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Munich, and these are your top stories. The future of Ukraine hangs in the balance here in Munich as European leaders consider their role in negotiations after Donald Trump's phone call to Vladimir Putin. A 50% cut in defense spending, Donald Trump floats the idea of a deal with Russia and China as a way to radically reduce military budgets. Plus, signs of tariff fatigue while Bloomberg's dollar index slides to two-month low as investors wind back bets that President Trump will ramp up levies. Now, Donald Trump has left European leaders scrambling for answers just weeks into his presidency. He's ordered tariffs on European steel and aluminium imports and is threatening more to come. He also blindsided the EU, saying he'd agreed to negotiate an end to the Ukraine war with Russian President Vladimir Putin. Now, while his defense secretary has said NATO membership for Ukraine was unrealistic. So lots to discuss with Dominique de Villepin. He's a former French prime minister and former foreign minister who joins us exclusively from Paris. Monsieur de Villepin, thank you so much for speaking to Bloomberg. Given everything that's happened over the last 5 days, given what Donald Trump has said was told in the in the phone call with Vladimir Putin, do you worry that the risk of a global conflict has just gotten bigger?
Well, yes, the risks exist, and it seems very much that the season part one on Ukraine is already finished. The declaration of Pete Hexit and the phone call between Donald Trump and Vladimir Putin has said and closed almost all the possible doors for a good outcome on Ukraine. All the red lines that Ukraine has put during the last years concerning, for example, the possibility to get back the territories, it seems very much that that's not on the table. The possibility to have American troops on the ground, it's not on the table. The possibility for Ukraine to have a NATO guarantee is not on the table. So very much it looks like part one is finished, and now it's a matter of knowing what can the Europeans do. What can Ukraine do? What can Ukraine do with the European? But I think we are not going to have some very nice surprises coming from the U.S.
Yeah. Monsieur de Villepin, to just be very clear, do you think the U.S. plan on Ukraine is the only viable plan? Do you think Russia should rejoin the G7? And do you think Ukraine needs to forget about joining NATO?
I think that it shows very clearly that the U.S. Trump administration has no ideas on Ukraine, no willingness to defend the interest of Ukraine, and is only interested by some big geopolitical plan. He wants to have a photo with Vladimir Putin. He wants to have some nice move like Vladimir Putin going back into the G7. But this is not going to change the reality of the Russian policy towards Ukraine, and not change the fact that in 2022 we have been going through a Russian aggression towards Ukraine. So I don't see any kind of solutions to the problems we are facing in Ukraine. It is like just closing the parentheses, just like closing the eyes on the reality and forgetting about this reality. It's a totally virtual game, and it shows that the US don't want anymore to cope with the European issues. The US wants to go and address the China issue. And of course, now it's up to the Europeans to take their destiny into their hand and help Ukraine.
But so what is the way forward for Europe? Do you think the US is still a reliable ally for Europe? And what's the right thing to do for Europe? Does Europe even have the money to put up for the $3 trillion that would be needed in defense and rebuilding over the next 10 years?
I think in the last weeks we had the answers. The US administration doesn't want to have the attitude of an ally. They don't want to pay the price for friendship, and I don't think anymore in US foreign policy the paradigm of democracy and values is anymore at the center of their concern. The main paradigm for US policy is the America's interest and dollar. Everything is guided by the single interest of the US, and not anymore by the idea of having a role to play towards the world, having a role to guarantee peace around the world. So it is a huge and main change for world policies, and everybody has to take the lessons. For Europe, it is the opening of a new chapter, and they have no other way than to write their own story from now. Of course, it's very costly. Of course, it's very painful. But this has been on the table for many years now. And I'm very enraged by the fact that not as many Europeans has been clear-sighted enough to take the lessons before. Because all this was written. And now we have to face realities.
Monsieur de Villepin, how seriously do you take Trump's plan for Gaza, and what can Arab countries do to prevent it?
I think that the same situation we are seeing in Ukraine, we are seeing it in Gaza. Donald Trump doesn't care about the Ukrainian people. He doesn't care about the European, and he doesn't care about the Palestinians, and he doesn't care about the Arab countries. He cares about his master plan to have Israel signing an agreement of normalization under the Abraham Accord with Saudi Arabia. That is the master plan. That is in the interest of what he believes is the interest of the US. But of course, this is not going to bring more stability for the region. This is not going to bring an answer for more justice given to the Palestinian. So we are again in the Middle East in the situation where the Europeans, the world community has to react. A unilateral plan, a US unilateral plan in line with Benjamin Netanyahu is going to have the same kind of consequences than the Bush plan in 2003 invading Iraq. You see, the first plan of Bush was based on the idea of use of military force. The plan of Donald Trump is to use power politics unilaterally. You cannot create peace in the Middle East without including everybody, without including an idea of justice, without respecting international law.
Mr. de Villepin, thank you so much for joining us today for this exclusive, important conversation. That was, of course, Dominique de Villepin, the former French Prime Minister. Now, coming up, we'll have plenty more from the Munich Security Conference. We'll speak to Singapore's Defense Minister here at MSC as Donald Trump's return to the White House reshapes global geopolitics. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
They're coming in 10 seconds. Welcome back, everyone. Now, Donald Trump is looming large over the Munich Security Conference, even though he's not attending in person. Now, leaders are meeting here as the U.S. president seeks an end to the war in Ukraine, floats a deal with Russia and China to cut defense spending, and suggests that Moscow is brought back into the G7. Well, we're now joined by Ong An Heng, the Singaporean defense minister. Minister, thank you so much for joining us. Look, it's quite a very important historical week. That's what it feels like.
Yes, it is.
What does it mean for geopolitics in Asia?
Well, for small states like Singapore, we've always felt that the big powers will have to decide. We have some agency, but neither do we believe that we have full sway over events. So I think for Asia, it is still the U.S.-China contestation that will affect us.
But, Minister, when you look at the Europe and the U.S. and what they're trying to do, there seems to be an underlying current of maybe he just wants to deal with Ukraine so that he can focus on Asia more. Is that how you read foreign policy this week?
Well, that's what the U.S. has said openly. And I've been talking to European leaders. Everyone agrees that the peace process needs to begin, and peace is a good idea for everyone. What's unsettled is the security guarantees for Ukraine and how to make sure that the aggression that Russia showed isn't repeated after the peace ensues. And for the impact on China, American policy has always been that, quote unquote, China is a pacing threat. And in terms of disposition of forces, the U.S. already pre-positioned more troops and assets into Asia, so that isn't really very different.
But can you give us a sense of how you're interpreting, his latest comments or what we've heard so far on Taiwan and the South China Sea?
I think neither U.S. nor China want to go to war over Taiwan. I think the U.S. recognizes that Taiwan is a deep red line for China, and we're in a better position, I think, when we were compared to 1 or 2 years ago. For South China Sea, we have to be careful, but I think there is less reason for casus belli. So I think if heads hold on steady and we agree on a modus vivendi, a sort of accommodation, and hope that time will ease the passage of both big powers, I think that's not a bad position.
Are you more optimistic or more pessimistic than you were 3 weeks ago after all the current developments?
It's certainly unpredictable. I think the biggest question on everyone's mind, and this is from the conversations I had with European leaders, is how U.S. has changed. It is now in the 60s and 70s, even for Europe and Asia, the U.S. was portrayed as a liberator, whether it's against Hitler's Nazis party or communism or other forces. Now U.S. is seen as a great disruptor. And how do you come to terms with new conditions? There is certainly a level of unpredictability that hasn't been seen before, but one hopes that doesn't lead to instability.
Minister, what's your take again on some of the reciprocal tariffs? Right? I mean, this has an impact on a lot of smaller Asian economies. And do you see that linked to defense?
Always. There's a dictum that trade and security are two faces of the same coin. And if your trade alliances shift or change, usually the security alliances will follow. If you talk to economists, they're not quite convinced that tariffs will solve many problems of the U.S. is facing. Remember, this is the richest nation that has benefited from globalization, and yet it wants to rewrite the rules for trade. It is what it is, and let's just watch. For Singapore, we're in a better position. We buy more from the U.S. than we sell. So that's been positive. And under President Trump, his first term, we signed a memorandum of understanding to extend the use of our bases, to rotate through them. So I think we're in a good position, and we will continue to seek to deepen the ties. I had a very good conversation with Secretary Hegseth, and I hope there was a meeting of minds and aspirations.
So it doesn't necessarily bring security back at the forefront, or security concerns back at the forefront.
For Asia?
For Asia.
Oh, security is always there. I mean, because the risk of contestation, conflict between U.S. and China will be devastating. I've said that again and again, and you really don't want to go there. And your question, are we in a better position? It's a question mark. Yeah. It's early days yet.
Minister, I know also the Prime Minister will deliver his budget in the next couple of days. What are you expecting for defense?
We have kept pace with our growth, and we're spending about 3% in GDP for our defense budget. We think that we'll continue to do that for this decade, barring unforeseen circumstances.
And procurement? I know there's been like F-35s. Will it be more or less similar?
We have already put in our orders for F-35As and Bs. We are in need of replacement of some platforms, but I'll announce it during Committee of Supply. But this is an ongoing exercise, and as long as Parliament approves my budget, we'll continue to modernize our military.
Minister, thank you so much for joining us. That was Ang Eng Hen, the Singapore Defense Minister. Coming up, we'll talk a lot more, of course, of defense and security here from the Munich Security Conference. Donald Trump orders officials to consider imposing reciprocal tariffs on numerous trading partners. For more on this, we'll be speaking to Valdis Dombrovskis, the Economy Commissioner of the European Commission. He joins us next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
So Donald Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners, including, of course, the European Union. Valdis Dombrovskis, European Commissioner for the Economy and Productivity, joins us now. Commissioner, thank you so much, as always, for giving us a little bit of your busy schedule. When you look at what Donald Trump has announced so far in terms of tariffs on steel and aluminium, the European Union always said, look, we can fight back. What would that look like?
Indeed, we are following closely the announcements of Trump administration as regards tariffs, and generally speaking, we are obviously disappointed. We do not see the basis for those tariffs, neither economically nor legally. The EU-US is having the largest trade and investment relationship in the world. We have deeply interconnected value chains, so all this is going to be quite disruptive economically. So we are in engagement with the U.S. administration also to find more precisely the plans to find a constructive ways forward. But if necessary, we are ready to defend our economic interests and to respond in a firm and proportionate way.
So, Commissioner, first of all, have you run the numbers of what that looks like? If there were the first wave of tariffs and if there's then reciprocal and backwards and forwards, what that does to GDP, or just in terms of how much that would cost?
Of course, it will depend on exact policies which are going to be enacted. In a sense, also on the U.S. side, there are still some considerations how these reciprocal tariffs are going to be applied. But the EU is already having actually one of the largest tariffs in the world, one of the lowest tariffs in the world. Sorry for that. So we do not see the economic reasoning for this as well. But obviously, we are looking. So what our options are, and if you remember, also from the first Trump administration, when it imposed the tariffs on steel and aluminium, we responded with our tariffs in a proportionate way.
Do you think it would be similar to what happened last time, or are there new regions of the economy that would be worse affected?
We see that there has been already announcement on steel and aluminium, and what is being discussed now with so-called reciprocal tariffs, it goes beyond it, so it can be broader than last time.
Commissioner, there's also been very little progress on defense spending from the EU. What are you expecting J.D. Vance in his big speech today to announce, and how can Europe step up?
Well, I think it's very clear also from recent announcements from U.S. administrations that EU has to step up its defense effort, defense spending, strengthening our own military industry, strengthening support for Ukraine, because obviously it's key that we achieve a peace in Europe and peace in Ukraine that is fair and lasting, and that it's not done behind Ukraine's back, but with Ukraine at the table. So, but it's clear that we will have to do more as Europeans. And actually, European Commission is preparing for next month's the white paper on the future of European defense, where we'll be elaborating exactly on those issues.
Joint debt? Is this a possibility?
Well, I will not go now in detail, but it's clear that defense spending will need to increase substantially both at national and at EU level.
Commissioner, some have floated the idea that the frozen assets, the frozen Russian assets, could then be spent by Ukraine to buy U.S. weapons. Is that a good idea?
Well, we know that right now the frozen Russian assets or immobilized Russian assets are being used, the proceeds from those assets are being used for extraordinary revenue acceleration loan, which is provided by G7 to Ukraine, in a sense to repay that loan. So if there are new initiatives being discussed, and obviously we're looking at all the possibilities and all the implications, because eventually it is important that Russia as an aggressor is paying for the damage which is creating in Ukraine.
But would it be possible that one day this money would be used to buy U.S. weapons to get U.S. on side?
That certainly all will require more discussions and engagements also with U.S. administrations. But as I said, we are assessing different possible options how to move forward. But it's worth keeping in mind that right now those assets are used as a revenue source for repayment of this extraordinary revenues acceleration loan, which is being provided for Ukraine. So in a sense, Russia is already paying in this way for the damage it's creating.
Commissioner, just a very quick final question on regulation. Do you think the EU will follow the US in deregulating, in regulating less, but also getting rid of some of what's in place now?
Well, we have been very clear from our side that we are not in deregulation, so we will not launch some kind of deregulation race here. What we are doing a simplification without abolishing our high social and environmental standards. We set a numerical target for how much administrative burden we want to reduce by 25% in general and by 35% for SMEs, but we are not, for example, abolishing the goals of European Green Deal, like carbon neutrality by 2050 and so on. We are rather looking how we can reach our policy goals in a more efficient and less costly manner.
Thank you so much, Commissioner, for joining us. That was Valdis Dombrovskis, European Commissioner for the Economy and Productivity. Now, we'll have plenty more from the Munich Security Conference all day, and then don't miss our panel here on the future of U.S.-Ukraine security cooperation. That will be with the Ukrainian President, Volodymyr Zelensky, and U.S. Senators, including Lindsey Graham, Jeanne Shaheen, and John Cornyn. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good morning from our global headquarters in New York. I'm Danny Berger, Manish Cranny on a well-deserved break today. Welcome to Bloomberg Brief. Let's set your agenda. Breathing room, President Trump unveils plans for reciprocal tariffs, but a delayed timeline strengthens the euro and sends stocks higher. A defense push. Washington tells Europe and the UK buy American arms to keep NATO strong as the security conference kicks off in Munich. And an iPhone revamp. Apple working with Alibaba and Baidu to bring AI features to China by mid-year. Happy Friday to you, and it is a glass half full market. Inflation data, the components that feed into CPI came in softer. No tariffs until April means that stocks could rally yesterday. We're a little changed this morning. Our S&P 500 futures and Russell 2000 ever so slightly weaker, but let's call it unchanged with NASDAQ futures. By the way, Meta rallying for 19 straight days, easily a new record and counting, up 24% this year. It is softer in the pre-market session. You can see there below your screen. Finally, for this bond market, it was also relief thanks to that PCE data and perhaps the Trump tariffs taking some time to figure out and implement and maybe get negotiations. Your 10-year yield back with a 4.5% handle. Again, little movement today. We will indeed be getting retail sales data. That comes out later this morning. Will that move the needle? How strong is the consumer? One last asset for you to keep track of. Gold hitting another record this morning above $2,900. Will anything stop gold's path? We have some guests today. We're bullish on gold. We'll get the latest from them. Some individual stocks now that we are keeping our eyes on. Hermes sales there reported this morning, surging almost 18% over the holiday season. The luxury trade is alive and well. Those shares are up 2% in the French trade. It outperformed its rivals. It had strong pricing power. And of course, as always, those waiting lists for the coveted handbags giving them the upper hand. Applied Materials, though, those falling in the pre-market session, down nearly 5%. It gave a lukewarm forecast for the current period for revenue. It cited the risk of export controls hurting its business. Finally, Airbnb, that in the pre-market trade, is surging this morning, up 13.7%. It issued an upbeat forecast for the first 3 months of this year, citing continued strong demand after a strong holiday travel season. And in just a few moments, we're going to catch up with Abigail Watt of UBS. Later this hour, stay with us. Brian Smedley of Synosure Strategies will be joining us. Let's, though, get back to our top story this morning. President Trump has ordered his administration to consider imposing reciprocal tariffs on a number of trading partners. Here's the president in the Oval Office yesterday.
Reciprocal tariffs, those two words. Reciprocal makes tariffs really fair.
Honestly, all countries, there'd be no exemptions, right? It would be all auto imports?
Any exemptions, no, because you don't need to.
Joining us now is Bloomberg's Brendan Murray. Brendan, we still don't have the details. That they have yet to work out. But from the announcement, what might these reciprocal tariffs look like?
Yeah, we're seeing a lot of analysts and economist reports coming in. They're starting to crunch the numbers. I'll give you a hypothetical. The UK has an effective tariff rate with the US of 3%. If the US were to come to the UK and say, yeah, well, what about all these other issues, your taxes, your regulations? That's more like a 20% tariff for us. So hypothetically, the US could come to the UK and say, actually, the tariff plus the non-tariff barriers equals 20% for us. So that's where we start our negotiations. So it's really a fundamental change in the way the world trades between countries, and on paper at least, it could have a huge effect. Now, how the negotiations country by country play out, we'll have to see over the coming months. But it's a sea change in the way the global trading system would work.
Just on that point, Brendan, this idea of negotiations, it's at least what gave the market comfort that you have potentially until April 1st to get this done. You've seen moves from different countries, India, Japan, Taiwan this morning, announcing more investment into the U.S. What are we tracking in terms of countries' ability to influence Trump? Is this the kind of thing that moves the needle to put more money into America?
Yeah, I mean, this is part of the goal is to get countries to the negotiating table. We've seen India, we've seen other countries, Japan, say we want to talk, and so this is part of the strategy, is to say, look, we have justification to raise tariffs on your goods if you don't lower yours on ours, and so that we will see play out in a series of negotiations. This will drive countries that have unfair measures in place, according to the Trump administration, to the bargaining table, and we'll see how it plays out. But I think the initial reaction from countries has been one that the Trump administration wanted by design.
Brendan, thank you so much. That is Bloomberg's Brendan Murray. Paul Donovan, by the way, at UBS, saying that markets are erring towards Trump being a pushover, not a protectionist, and that might be explaining for some of the reaction. Joining us now, Abigail Watt, U.S. economist at UBS. Abigail, really great to see you this morning. This is a tricky one for you and those in your field. I don't envy you to try to incorporate what the outlook might look like, considering we don't know the details. Have you started work in trying to model out what some of these tariffs might look like?
Yeah, so I think you're totally right to point out how tricky this is. Obviously, we had the announcement of the intention to impose reciprocal tariffs yesterday, but it's not clear ultimately kind of whether they're going to go kind of line by line through the tariff schedules and equalize, or whether they're going to prioritize, I guess, those where the US kind of trades the most with. I think that's the kind of approach here, is to think about kind of both the kind of countries that could potentially be targeted more, and also think about the sectors where you might see kind of increases in tariffs. Try and narrow down, I guess, the set to kind of look at. But I think ultimately for us, I think we're kind of thinking about this in the scope of the kind of other tariff policies that we've already heard from the Trump administration. Obviously, we've heard the potential for 25% tariffs on Canada and Mexico. We've also seen the imposition of an additional 10% tariff on imports from China already. We saw the steel and aluminium tariffs of 25% earlier this week. And I think the question for us as well is how does this sit relative to some of the proposals that were made throughout the campaign? Is this reciprocal tariff being imposed instead of the universal tariff proposal that was touted throughout the campaign? And I think the key thing that matters in terms of the implication for the US economy and the US outlook is the kind of breadth of tariffs that are put in place, the kind of sectors that are tariffed, the kind of goods that are tariffed, but also the kind of extent to which we can see substitutability from US importers, because ultimately that's what's going to impact the pass-through to inflation.
To that point, as you're looking at various announcements come out and the way that these are likely leaning, what differentiates between what's just one-off price increases for consumers who have to deal with this versus something that might cause more entrenched inflation?
Yeah, so I think that's a really good question. And one of the key differences when we've done our modeling of this, when we look at some of these individual kind of increases in, say, steel and aluminium tariffs versus potentially kind of a broad base, 10% tariff that was proposed throughout the campaign, we do see significant differences in terms of the inflation impacts. So our estimates for kind of, say, a steel and aluminium tariff would be kind of less than 10 basis points on annual inflation, whereas our estimates of some of the campaign promises when we looked at kind of a 60 percentage point increase in tariffs on China and the 10% tariff on the rest of the world, that would see kind of around 150 basis point increase in inflation. So I think it's to do with kind of the breadth and the ability for importers to substitute away, and as well the goods that are covered. So if we see kind of intermediate goods covered versus final consumer products, that's how we would think about the kind of potential pass-through to inflation.
Well, that's where we might go. But Abigail, let's talk about the starting point of where we are now. In January, we've gotten the surprise of a hotter CPI, PPI yesterday too, but we look through that. The components, yes, sure, they're softer. But when it comes to the hotter data, how do you interpret that? Is this a one-off fluke of strange seasonal impacts of January, or is it something that we should be concerned about?
Yeah, so as you say, we do tend to see kind of stronger price increases at the beginning of the year. The CPI came in kind of hotter than we had expected, but when we look at the composition, the area of the surprise was actually in components that don't necessarily pass through into PCE prices, which is obviously what the FOMC is targeting. I do think, obviously we'll be watching kind of closely to see how that kind of feeds into the PCE price expectations. For us, we do think that we'll see a softer increase in core PCE this month than the CPI, and that would ultimately mean that the annual rates of inflation actually can lap lower relative to kind of the strong January print that we saw last year. And I think that is kind of welcome news, I think, for the FOMC, this idea that you could see kind of progress on kind of the annual rates of inflation. And that is kind of what we're expecting to see in the coming months. But I do think you're right to put that in the kind of backdrop of the kind of broader resilience. And that is the message we've heard from the FOMC, this idea that the resilience in the economy gives them kind of time to wait, especially in light of the uncertainty around trade policy and the uncertainty around kind of the policy implications, of the announcements that we've heard from the new administration. With that uncertainty, I think that likely leaves the Fed on pause for longer. We actually are expecting the first cut from the FOMC kind of in the second half of this year now, just given that uncertainty and this kind of stickier inflation narrative.
Yep, the market moving to where you are as well. Abigail, really great to get your thoughts this morning. Enjoy the rest of your Friday and your weekend. Abigail Watt of UBS. Let's get now some other top stories that are trending on the terminal this morning. Apple is working to bring its AI features to China by the middle of this year. Sources say it's working closely with Baidu and Alibaba to adapt its Apple Intelligence platform for the region. The iPhone maker is aiming to launch as early as May. A representative for Apple declined to comment. Sources say China has invited prominent entrepreneurs, including Alibaba co-founder Jack Ma and the founder of DeepSeek, to meet the nation's top leaders. The meeting may happen as soon as next week. President Xi is also expected to attend. It could send a signal that China is adopting a more supportive stance towards private sector companies. And in a town hall meeting this week, Jamie Dimon said JP Morgan will scale back spending on what he called stupid diversity initiatives. Dimon also railed against an online petition on the bank's return to office mandate, saying, quote, "I don't care how many people sign that petition." I should also add he said an explicitive in that statement, which I cannot say on air, or else I will lose my job. Anyway, that's the latest from Jamie Dimon. But coming up, we get back to politics. President Trump ramps up efforts to cut defense spending. We're going to take you live to the Munich Security Conference. That's up next on your brief.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It's your Bloomberg Brief. Danny Berger here in New York. Officials around the world are gathered in Munich for the annual security conference. That includes a U.S. delegation led by Vice President J.D. Vance and Special Envoy Keith Kellogg. Bloomberg has learned that the Trump administration is also telling allies in Europe that it wants them to buy American weapons and military equipment to keep maintaining the NATO alliance. Joining us live from the conference in Munich is Bloomberg's Oliver Crook. Oliver, a lot of information coming hard and fast for Europeans who are there at the security conference. What has been the response?
Yeah, so listen, Danny, I mean, every sort of 24 hours, the sort of agenda gets rewritten here at the Munich Security Conference for everybody from policymakers to a lot of the CEOs of defense companies that I've been speaking to. This morning, I mean, just overnight, hearing from Donald Trump that he wants to have this sort of high-level meeting with the Russians and the Chinese in order to have their defense spending, while at the same time wanting other countries to spend more on American defense. Again, this is all sort of conflicting information, and all of these European policymakers and CEOs, and there are a lot of them, it's not just the defense industry, it's everybody's coming here to listen to what the Americans have to say. We will be hearing from J.D. Vance in about 3 hours' time. I can tell you from the people that we have spoken to, there is a sort of wrecking ball speech that is anticipated from the U.S. administration to really tell the Europeans that they're on their own. And at the end of the day, it may be the case that the Americans here are here to talk and not to listen. And that is really what is concerning many policymakers here, particularly on the issue of Ukraine, when Donald Trump earlier in the week effectively began negotiations and the Europeans are not at the table.
Oliver, can you just get into that? What a shift this is from what we've heard from Trump, from Defense Secretary Pete Hegseth, this idea of the U.S. not being the primary guarantor of safety in Europe and specifically in Ukraine.
But listen, it's been a long time coming. I mean, we talk that the Europeans react with a lot of shock to the fact that Trump talked to Putin, to this, that, and the other. I just spoke to the former chancellor of Austria who just stepped down a couple of weeks ago. He says, listen, none of this is really a surprise. I think that just for the Europeans, it really is so shocking because they basically have not adapted their foreign policy to the new reality of American foreign policy. This idea of multilateralism, cooperation at the G7 level, and sort of getting consensus, making unified decisions, that era is over. And for these Europeans, this is now the new era of American unilateralism, and they have not yet found a way to sort of how to deal with that and how to deal with that collectively as Europeans, and sort of how they can sort of band up together and come to a unified front. Part of that, though, Danny, is their own fault. They have been underspending on defense for many, many, many years. We know that they've just only started to hit that 2% threshold. And at the end of the day, the Trump administration's view is going to be, listen, you get a seat at the table if you've got a military to back it. They don't. And that is the sort of urgent news here for the Europeans. They need to get that defense spending up. From all the defense CEOs that I spoke to, as unreliable as the U.S. situation is, it seems very certain that no matter what, the Europeans will be spending a lot more money, and that is evident in their order books.
On one hand, you have Trump and the administration saying, Europe, you need to spend more on defense. But there was also this interesting wrinkle, Oliver, with Russia and China. Trump talking about the willingness to have a trilateral meeting with them and discuss cutting defense spending. What do we know about that proposal?
Yeah, I mean, listen, this is something that, I mean, I spoke to CEOs who are, you know, big CEOs of defense companies, and some of them, this was news to them this morning, right? So you have to imagine running a business when basically you have the biggest spender on defense talking about potentially having what they spend on it, right? And so a lot of these defense companies, you know, for example, Saab, they make the Joint Strike Missiles that go into the F-35 jets. When they hear all of this stuff, they need to try to make an appraisal of kind of what the capacity is going to look like going forward. I think it just throws a real wrench into the planning for a lot of these companies, and that is again what they're trying to do here. They're trying to come here to hear from the U.S. administration from themselves, basically for the first time in Europe, right? This is the first high-level delegation that has come to Europe since Trump was inaugurated. You have Marco Rubio, you have J.D. Vance, you have Keith Kellogg, and everybody here is trying to get a flavor in order to understand really what this administration is going to look like in terms of its policy towards Europe and how to adapt their businesses and their policy to that.
Oliver, fantastic reporting. We're going to catch up with you again later in the hour for more on the Munich Security Conference. That's Oliver Crook in Germany. Coming up, HSBC planning fresh rounds of job cuts. We're going to have more on that Bloomberg scoop. That's up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief. Danny Berger in New York. Let's get you some front page news. A look at what's making headlines around the world. First up on the Washington Post, a judge has extended the pause on President Trump's putting 2,100 U.S. aid workers on leave. The ruling was in response to two separate lawsuits alleging that the president's executive order was arbitrary. It blocks administration from taking further action until February 21st. Next up, the Washington Post has this on their front page. They're reporting on an interview with Vice President J.D. Vance that the U.S. would hit Russia with sanctions and possibly military action if a peace deal is not reached. He said a deal may be coming, that it will, quote, shock a lot of people. Vance struck a tougher tone than Defense Secretary Pete Hegseth, who has suggested that the U.S. would not commit forces. And a Bloomberg scoop to bring you, HSBC is kicking off a fresh round of job cuts at its investment bank. Comes as the CEO, Georges Eldery, has been continuing his overhaul by reducing costs and restructuring. Let's get the latest on the story. Joining us now is Tomas Notzel of Bloomberg Intelligence. Tomas, thank you so much for joining us. What do we know about where these cuts and job cuts and cost cuts will be concentrated?
Yes, good morning. Well, we don't know much yet. As the only news we know is it is starting in Asia, and we are expecting more to be rolled out across the whole organization. But I think the most important is to mention that it is not a new news, I would say. You know, we have heard from HSBC that they are going to revamp its investment banking business in the US and Europe, and I would expect that more job cuts will come in this region. And most of this news will be released next week when George Eldery is revealing his new plan.
Then, if it is concentrated in Asia, this is one of the bank's core markets, Tomas. So how do they continue their investment? What have they been telling employees? And what does it mean for their future there if that's where these cuts and restructuring is concentrated?
Yeah, that's exactly a good point, I would say, because, you know, Asia is the main focus of HSBC. The whole changes over the last few years, it was about focusing on Asia market, and now we see jobs being cut there as well. Of course, we are seeing global banking market being being merged with the commercial banking, so there will be some overlap and there will be some job losses. But the question is right now, what sort of capital will be allocated to investment banking unit in Asia? And still, you know, HSBC is running on a quite low market share in equities, in M&A business over there. 1 to 2% is not as much as we would expect from the bank, who is so big, has such a great footprint in Asia. So definitely more news, more insight into what actually they're gonna do with the investment banking business there will be the focus of next week's call.
Okay, Tomas, thank you very much. Again, that is Tomas Notzel of Bloomberg Intelligence. A quick check on your markets as we head to the break. The S&P 500, it is slightly weaker this morning after a sizable rally. We are now about 0.06% away from another all-time high. The Bloomberg Dollar Index, that is weaker this morning. The euro has been strengthening. Some relief for these markets that the deadline appears to be April for tariffs. Does that mean that we will indeed have negotiations before you actually get any placed on? Paul Donovan at UBS saying that the markets had to decide whether the president was being a protectionist or a pushover, and for now are erring towards pushover. Your 10-year yield at 4.52% this morning. Coming up, dangerous times for markets. Synosure CIO Brian Smedley joins us, warning of the risks ahead. All of that is to come on your Bloomberg Brief.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a
dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Breathing room, President Trump unveils plans for reciprocal tariffs, but a delayed timeline strengthens the euro and sends stocks higher. A defense push, Washington tells Europe and the UK, buy American arms to keep NATO strong as a security conference kicks off in Munich. And an iPhone revamp, Apple working with Alibaba and Baidu to bring AI features to China by mid-year. Welcome to the glass half full market. Yes, we heard about reciprocal tariffs, but no, we don't have the details, and no, we won't get them until April. That was enough to send stocks higher, away 0.06% beneath its all-time highs. We're a little changed this morning on basically every single index. Meta, that is weaker. You can see it at the bottom of your screen. It hasn't fallen for 19 straight days and counting, easily a new record with tech lifting the index yesterday. Meanwhile, treasuries, those are also a little changed today. 10-year yields fell by nearly 50 basis points after the PPI data yesterday. Sure, the headline was stronger than expected, but it was the components that feed into the PCE that did look a bit less threatening that comforted this market. We're back at a 4.5% handle on your 10-year yield, twos at 4.29. Meanwhile, gold, that is also trading at a new record above $2,900. Nothing really stopping that at the moment. Perhaps the tariff news feeding into that as well. We're going to catch up with our next guest and his thought on gold. He is bullish on it. But elsewhere, Brian Smedley of Cynosure warning of more risks ahead for stocks, writing, quote, the path of least resistance for the stock market is higher in the short term as we've moved past several key risk events in the past week. Payroll, CPI, Powell testimony, tariff announcements, ongoing earnings. But he goes on to write, this is a more dangerous time for markets than investors seem to realize. Pleased to say Brian joins us now. He is the CIO of Cynosure Strategies and was formerly chief economist at Guggenheim. Brian, thank you so much for joining. Great to see you in person.
Thanks, Danny. Great to be here.
So you write a couple reasons why markets should be better in the short term, but you say that there are risks. What are those risks?
Yeah, I think the key risks are, in the delay is actually a risk in the tariff announcement, and that is because the longer we're talking about tariffs and we're waiting for the president to implement his plan, the more consumers and businesses are going to be hearing about tariffs and anticipating higher prices. And I think the key risk for the Fed and for the markets is that consumer inflation expectations continue to creep higher. And if that does play out, there's a chance the Fed will have to do something about it.
Okay, that's really interesting because on earnings calls, Lori Calvasine and the team at RBC have been pointing this out, that you have words like uncertainty, just a lot of hesitation, not knowing what to do. But the market has said, this is good news because it means we get negotiations. Why won't that same sort of sentiment play out on the ground level?
Well, I think it's really two things. One is on the consumer level, it's higher prices and inflation expectations potentially forcing the Fed's hand. But on the other side, you mentioned the uncertainty in the earnings announcements. This is going to be a headwind, I think, for business investment because it introduces a lot of supply chain uncertainty. The longer we have to wait to find out, the lay of the land with tariffs and supply chains, the longer it's going to potentially force businesses to be more cautious on their investment plans and their hiring plans. And eventually we'll have to see whether that has a bearing on the growth data. But my guess is that it's on balance negative for growth and more positive for inflation.
Is it stagflation? I mean, that is certainly what you're describing in a very different environment from what the Fed was hiking into last time around. There was strong growth along with inflation. Yeah. How does that color what the Fed does from here?
Well, look, you're right to point out a few years ago, I feel like we just went through an enormous inflationary process, big supply shock, big demand shock, and the highest inflation in 40 years. So, I think one of the concerns, and Chair Powell discussed this in his testimony this week, is that I would put it in terms of potentially a bit of PTSD on the part of consumers and businesses. We just lived through this big inflationary process, and we've come back a long way. As Powell mentioned, the process is not over. The job is not quite done. But the concern is that inflation expectations could become unmoored. And what I think is interesting in the data is, although actual inflation, headline and core, is well below where we peaked a couple of years ago, inflation expectations have been moving higher. In fact, if you look at the latest University of Michigan data, not only did the 1 year ahead expectation jump quite surprisingly, but also the longer term 5 to 10 year inflation expectation moved up to 3.3%. Which isn't too far away from the Fed's target, but interestingly, it's the highest we've seen in this cycle, higher than occurred a couple of years ago when actual inflation was considerably higher than it is today.
I have to say, it's interesting because the bond market has almost been saying something similar because this was supposed to be the year of steepeners. So far this year, it's been a flattener. It's been the long end that's been moving higher, almost seeming to suggest it's not higher for longer. It's something that looks like higher forever. Is that a right way to interpret the signal you're getting?
Well, if you look at the contrast between the median dot in the Fed's SEP, the dot plot, there is a notable gap between that kind of longer run neutral rate estimate and where the market's pricing. The market's priced at a terminal SOFR rate, or Fed funds, of around 4% in the next year or two, and that would be a resting place that's quite a bit above where most economists think the neutral rate is. And so, yeah, I think to your point, the market is suggesting that with inflation staying a bit firmer, we have 2 year TIPS inflation break-evens at 3.15%. That overstates, the miss on the Fed's target because CPI tends to run hotter than PCE. But nevertheless, that would be consistent if that were to play out over the next couple of years with inflation running consistently above the Fed's target, and probably would slow their roll in terms of bringing, rates back down to that, more lower neutral rate.
So are we having the wrong conversation then? Should we not be talking about will they, won't they cut? Should we be talking about will they, won't they hike?
Yeah, well, it raises an interesting question for the Fed in terms of managing financial conditions. Powell mentioned that their view is that the policy rate is still above neutral and therefore is adding restrictive impulse on the economy, should bring down demand for labor, cool inflation back to target. But broader financial conditions, I think, are pretty accommodative. Credit spreads have been at the tightest levels since 2007. And equity markets, as you just mentioned, S&P's near an all-time high. And financial conditions broadly are quite favorable for continued growth, and growth came in quite a bit above expectations last year. And so I think the Fed is going to have a bit of a challenge on their hands in communicating in a way that could potentially limit, again, the unmooring of inflation expectations. And so what they might need to go to, I agree with the market that the hurdle to hiking rates is pretty high, at least in the next several meetings. I don't think that's likely at all. However, what they might need to do is jawbone a little bit more, and which is to say, focus on forward guidance and maybe introduce a little bit more two-way risk so that markets have to factor that in.
Is that jawboning, though, complicated by the potential appearance of politics? Early in your career, you were at the New York Fed. You know what some of those conversations look like with the president this time around, who's very willing to voice his opinion about what the Fed was doing, which, by the way, were cutting and sounding very dovish until his inauguration.
Yeah. Yeah, no, you're right. It's always challenging for a Fed chair or other Fed officials to navigate an environment like this, but it's particularly the case with this administration and with a president who is, who takes a much more vocal approach and has been critical of the Fed in the past. So it's a difficult, line for the chair to walk. You saw, I think he did that pretty skillfully in his testimony this week in the House and the Senate. But it's definitely the case that they're going to be careful and very circumspect in how they describe, any future policy steps. Powell went out of his way to avoid, commenting on some of the president's comments with regard to tariffs and monetary policy this week.
Brian, I have to get here because I teased it right before you came on. Gold at a new record. You still like the asset. How much more space does it have to run?
I think there's plenty of room to run for gold, absolutely. And I think one bit of perspective that I think is important for investors to bear in mind is that gold had a phenomenal run over the last 12 months plus. And that's in spite of a level of high real interest rates. If you look at TIPS, real yields have been elevated and volatile, but also the dollar's been stronger. And so generally speaking, that would be a bit of a headwind for gold. But notwithstanding that, we've been powering ahead. And I think that speaks to the strength of demand from asset allocators, private investors, but also foreign official investors, reserve managers, and the like. And so I think the outlook for gold is pretty positive. And, in our view, this is a late cycle regime. The unemployment rate is low, but has begun to move up off its trough. And the yield curve is, notwithstanding the recent price action, been re-steepening as the Fed cut rates. That's typically a setup when gold tends to perform well. So our expectation is that gold will benefit in the short term from the uncertainty around trade and geopolitics, but over the more medium term, let's say over the next 1 to 2 years, eventually, I think the labor market is going to roll over, and the Fed is going to, in time, need to respond to that, by going through a larger easing cycle. And if that plays out, that's going to be a big tailwind for gold.
Great. Well, expensive gold just in time for Valentine's Day. It's fitting. Brian, thank you so much for joining. Unfortunately, we're out of time. We could do this all day. Thanks so much for joining. That is Brian Medley of Sinosure Strategies. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
reciprocal tariffs, those two words, reciprocal makes tariffs really fair.
There'd be no exemptions, right? It would be all auto imports?
Any exemptions now, because you don't need to.
That was President Trump ordering his administration to consider imposing reciprocal tariffs on a number of trading partners. Bloomberg's Oliver Crook joins us now, who's at the Munich Security Conference. Oliver, I know there's so much for you to keep track of there, not just security, not just Ukraine, but also Europe having to grapple with reciprocal tariffs. Trump specifically calling out a variety of nations, including the EU. How threatened are the folks over there at the possibility of reciprocal tariffs?
Listen, they've been sort of having a long time to sort of prepare for this. We know what Trump is after. Trump is after that trade deficit that exists between the United States and the EU, which amounts to close to $250 billion in the favor of the European Union. This is something that President Trump ran on. This is something that is not coming as a shock to the Europeans. What is interesting is we had those tariffs already discussed about aluminum and steel. That is really sort of peanuts compared to what the other things he's talking about now, which is basically the auto industry, and that hits right here front and center to the Germans. If you start to see a sort of decline in auto sales from the Germans into the United States, that will spell another year of recession and contraction for the German economy, without a doubt. So they're going to do, basically, it seems, everything in their power to avoid this. We just heard from Ursula von der Leyen. She just walked in a couple hours ago, speaking here, saying that basically reciprocal tariffs is pulling things in the wrong direction. They can keep saying that. That is not going to change the reality. And for the Germans here, they're very sort of concerned that this is going to happen. But we should also say, Danny, this sort of tariff picture isn't as black and white as, you know, the Europeans just produce cars and send them to the United States. That is, of course, true, and that they're imbalanced in that way. But for example, Mercedes-Benz has a factory in the United States where they build their SUVs. Those SUVs are sold in the U.S., but they're also shipped to Europe and sold to the Europeans. So again, this is part of the story and part of what these businesses are going to be grappling with to figure out what is going to go on with these tariffs. But again, every passing day brings a sort of new surprise. And at the end of the day, what these people want is certainty. It is not what they've got right now.
Oliver, and of course, Russia-Ukraine at the top of mind there. We're just getting some lines from the Ukrainian President Vladimir Zelensky. I'll just read them to you. Planning to discuss Russia's Belarus plans with us. Says that Ukraine is ready to discuss anything to stop Putin. Reiterating that NATO is the cheapest way to protect Ukraine and ready for any format to stop Putin. Again, it's this willingness, the willing for and ready for any format to stop Putin. We've gotten some strong language from the Trump administration, from Pete Hegseth, that really makes it seem like they are the ones that are setting the ground rules, that are things like not allowing them to join NATO, various border policies for what the shape of Ukraine might look like. Where do we stand on negotiations? Is Europe in the room at all, Oliver?
So listen, there's so many layers to this, Danny, so let's just try to disentangle it. There's a degree to which Volodymyr Zelensky needs to spin everything that the U.S. does as something positive so that they can live with, because at the end of the day, it's the United States calling the shots. We heard from Volodymyr Zelensky earlier in the week saying that basically security guarantees without the U.S., i.e. security guarantees just from the Europeans, is not really worth anything, right? So at the end of the day, the United States is absolutely fundamental here. But again, we heard from Trump yesterday saying that there might be high-level meetings between the Ukrainians, the United States, and the Russians here in Munich. I've spoken to a number of officials here in the German government. They're saying there is no such plan of the meeting. They would know they'd have to issue visas for Russians to come here, or maybe they're not talking about it. But again, these are things that are all in the room. And at the end of the day, Volodymyr Zelensky did say that there is not going to start negotiations until, you know, basically these negotiations officially begin. I think the concern is here. At the end of the day, the Americans have said they're going to take a much more practical approach to the question of Ukraine. They're going to acknowledge the fact that some land is going to have to be given up to Russia. They're going to have to acknowledge that NATO is a very long shot for the Ukrainians. The real concern for the Europeans and the Ukrainians is that you're basically saying that before you've entered into formal negotiations. Those are chips that they wanted to leave into the negotiation table. Those are already on the table, so they're seen as sort of foregone conclusions for the negotiators.
Oliver, thank you so much. That is Bloomberg's Oliver Crook in Munich. And again, we're looking at pictures from the President Volodymyr Zelensky of Ukraine just moments ago, saying that Putin doesn't want peace, as well as saying that they're ready for any format to stop Putin. Also saying that he had a conversation with Trump, calling it good and positive. Okay, let's turn to tech now. Apple working to bring its AI features to China by the middle of the year. That comes on the back of an announcement that Alibaba and Baidu will help Apple to modify its AI models for Chinese users. Joining us for more is Bloomberg tech reporter Sankalp Fartial. Sankalp, it is a thing of struggle for Apple, them trying to sell into China. It's been really, really painful in their latest earnings. How big of a boost would this be for them?
Hey, so this is a great move for Apple because they really need to be deeply entrenched in China, which is their biggest market outside of the US. This alliance with local partners like Alibaba and Baidu will help them. At least that's what the company is thinking. And for Apple, this is a huge step because this is deeper than they've ever gone with any local partnership.
So given that, because obviously regulators have to approve this in order for them to have their AI features into the market, does it essentially give them a leg up? Is it a sure thing if they are working with Alibaba and Baidu to get it done?
I mean, the kind of market China is, I wouldn't say it's a sure thing, but it definitely gives Apple a better chance at cracking, the regulatory hurdles open for themselves. This means that, the Chinese censorship will be taken care of by the likes of Alibaba, who will have this layer of filter above Apple's AI, on-device AI. So this gives Apple a better fighting chance at, they're selling their devices, AI-enabled devices in China.
Elsewhere in the tech world, Sandkelp, you have Google restoring TikTok in the App Store. It had been taken down over the confusion, the uncertainty as to whether it will or will not be banned. What sort of assurances did they get from Trump? What gives them the confidence to be able to have it in the App Store without facing some sort of fine?
I think this is a really tough road for companies right now. In terms of assurances, I'm not exactly aware of how deep the promises have been made, but TikTok is a very popular app on the app stores. It's given a great fight to Instagram, Meta's Instagram. So I think right now Google is bringing it back, but I think we'll have to wait and watch and see where this goes. For now, it's back, but for certain, we can't say this is the end of the road for anyone. I mean, this is a space you need to watch very carefully from here on.
Sandkelp, appreciate it. That is Bloomberg Sandkelp Fartial. Now, we are almost 80% into this earnings season. Reporting before the market opened this morning is Moderna. Let's bring in Bloomberg senior pharmaceutical analyst Sam Fazeli for more. Sam, there's a lot in pharma right now. Let's just stick with the fundamentals for the moment. Moderna, what are we looking out for?
Yeah, so thanks for having me on again, Danny. The story with Moderna is that it's been as you can see, the share price chart is not looking pretty at all. And that's on the back of several downgrades along the year in 2024 for the 2024 year. And then, of course, the guidance for 2025, which they've already given, which looked a lot less than they had originally anticipated. So they'd said a couple of weeks ago that they're now looking for between $1.5 to $2.5 billion of sales in 2025, which was below the previous estimates of 3 to 3.5, etc. So that's what's been driving this share price down. And I think, of course, one of the issues for Moderna is that it has also got a very, very hefty cash burn because it's doing a lot of trials for a lot of very interesting drugs that they're testing out to see whether they work out or not.
For the pharma industry as a whole, Sam, if I can just jump in, apologies, just because you do have this big thing looming over them, and it is the politics of it all.
Right.
We had President Trump talking about various industries that tariffs would impact. He specifically called out pharma, saying that there'd also be taxes over and above the reciprocal tariffs at a later date. What might this look like for the industry?
Yeah, so specifically for Moderna, not much there except for the push against vaccines potentially, right? Which, remember, that's also been a pressure on them. But for the industry as a whole, with regards to tariffs, one of the biggest problems is that a lot of the imports that the US makes for pharmaceuticals are for the generic side of the equation, which are the cheaper drugs. So if you start putting pressure on those and putting those prices up, that kind of works against by adding a tariff, that works against what you're trying to do, which is make America healthy again and give them access to cheaper drugs. I think what we have to be looking forward to is pharma companies telling us where are their products manufactured, and also the administration telling us is whether a company is foreign, does it matter where their product's manufactured? If you're a foreign company, even if you manufacture in the US and you're not importing, I'm going to add a tax. Those are the things that we need to figure out.
Well, you kind of hinted at this, but didn't outright say it, Sam, in some of what you're saying, that we do have a new head of Health and Human Services, and that's RFK Jr., someone who's had very strong opinions about the industry. Is the industry gearing up for a big shift in what they're going to get from that side of the administration?
Yeah, so Danny, RFK Jr. has been very clear about quite a lot of his thoughts on the entirety of healthcare, some of which around the food area, plastics, etc., are great, and they're really valuable if they can enact them for helping the U.S. health in general. But pressures on the use of obesity drugs, for instance, pressures on the use of vaccines, those are the sorts of things that we hopefully won't see, because they are an amazing method for managing health in general and avoiding infectious diseases, which are one of the biggest killers. So we're going to have to see how this all pans out. And there are ways that the HHS can affect things that are not going to be positive for the pharma industry.
Sam, we're going to have to leave it there. A lot to cover. Thanks for doing it for us. Sam Fazeli of Bloomberg Intelligence.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Let's get you set up for your trading day ahead of a long weekend. Moderna, that will be having its earnings before the market open. Retail sales data, that comes out at 8:30 a.m. Eastern. And then we're going to be rounding out a busy week with hedge fund 13F filings. A quick check on your bond market before the end of this hour. Little change this morning. Interesting note from Michael Hartnett from Bank of America this morning, saying that hot inflation actually might be a good thing for financial markets, writing that it would force Donald Trump to opt for smaller trade tariffs. So the most recent CPI news, maybe that's a good thing. That's it for your Bloomberg Brief for this week. Surveillance will take the reins from here.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Tariffs are the wild card this year. It is what everybody is talking about.
Policy is sort of rolling out, and consequences and decision nodes are happening in real time.
The question is, are there any carve-outs to those tariffs? The inflationary effect will be less the more you get carve-outs.
If we see some really big increases in inflation, that's going to be very disturbing.
There seems to be a lot of panicking about it, but maybe we need to kind of be more rational. There's a lot of devil in the details.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, set to snap a 2-week losing streak on the S&P 500. Your equity market bouncing back this week, following the biggest one-day gain in about a month. This morning, negative by 0.1% on the S&P 500. On the NASDAQ, we're down about 0.1% also. Through the week, this market not trading on what the president has said. This market is trading on what he didn't do.
What he didn't do was exercise some sort of massive and specific tariff plan on a lot of governments that a lot of people were worried about, which is the reason why you're seeing a relief rally and the reason why you're seeing the dollar fall to the weakest going back to mid-December. At the same time, you have to wonder if this is a market that is trading on trying to take out tail risks and just look at the possible upsides rather than anything else, whether it's inflation or whether it's perhaps the removal of a tariff threat.
There's an uncomfortable calm gripping this market. You can feel it as we just look through every single threat. Peter Chi of Academy, who joins us a little bit later, writes this. My take is the president was talked down from what he wanted to do by some of his advisors.
And some of those advisors, Jonathan, are not even in place officially yet. You have Howard Lutnick in the room where he hasn't even gotten his confirmation vote. But in order for Trump to maybe do what he wants to do, he needs to wait for his ambassador at USTR, his commerce secretary, to be in place. What I saw yesterday was almost a copy and paste of the executive orders he put out in his first term, except, you know, put in every single country instead of China. And it's a measure, a directive to go investigating. There were no tariffs yesterday. Not a single tariff was put on, and that's why this market ended up rallying.
Let's go to the schedule for today. It's another busy one. So at 8:30 Eastern Time, we'll get U.S. retail sales. At some point this morning, you'll hear from the Vice President, J.D. Vance, at the Munich Security Conference. On any other day, this headline from this president would be front-page news. From any other president, this headline would be front-page news. I'd love to have Putin back in the G7. Russia should be sitting at the table. Some of the headlines from the news conference yesterday were stunning. We'll meet with China and Russia on military spending. We want to cut the military budget in half.
He is talking about the possibility of both Russia and China helping to end conflicts and create a more stable backdrop, which is exactly antithetical to what we've heard out of the European Union leaders as well as President Biden before Trump. There is a real question here about whether this brings us closer to peace or further away. You have a lot of analysts saying, actually, this probably opens the door to more negotiations. And then you have the Europeans who are saying, actually, this pushes us further away. At the same time, you are correct. It just shows how much the vibe has shifted.
It's going to be an incredibly tense Munich Security Conference when J.D. Vance and General Keith Kellogg go in there and meet with their European counterparts. Many will say, why is Trump being a bit warmer or softer towards President Putin? The Wall Street Journal this morning, editorial board, scathing. Mr. Trump is treating Putin and Russia unlike any other negotiating partner. His usual method is to make maximalist demands. But some of them would maybe say he's giving Putin an off-ramp because his end goal is peace.
We'll hear from the Vice President a little bit later on this morning. We'll be taking those comments live right here on Bloomberg TV. If you are just joining us, welcome to the program. Equity futures just a little bit softer on the session. We're down 0.1%. Coming up on the program, coming up this hour, we'll catch up with Jim Bianco of Bianco Research. As stocks look through trade threats, Jeanette Lowe of Strategas as Trump takes aim at Europe, and Dan Stuyven of Goldman Sachs on his outlook for energy markets. We begin this hour with stocks near all-time highs as markets look through tariff threats. Jim Bianco of Bianco Research is watching 10-year bond yields and writes the following: if rates are steady, then 10-year bond yields should continue sideways before heading above 5%, and the curve will steepen. Jim joins us now for more. Jim Bianco, I want to go to a quote from Michael Hartnett of Bank of America and get your thoughts on this take this morning. We say hot 3% US CPI January is a blessing in disguise for both bonds and stocks. Michael and the team go on to say rising inflation means Trump must go small, not big on tariffs and immigration in the coming months to avoid fanning a second wave of inflation. Jim, would you agree with that take?
No, I would not. I mean, we all know the phrase is you're supposed to take Trump seriously, but not literally. And that's what I think we've seen in the market in the last 24 hours. They're torturing themselves to basically, you know, micro read what Trump has said, but take him seriously. He intends on doing tariffs, and we are going to get tariffs, and they're going to come. And as much as we want to try and talk ourselves out of it, they are coming later this year. And I might add, markets get things wrong all the time. It convinced itself in January 2020 COVID wasn't going to be anything, and it was. It convinced itself in August of 2020 that, you know, the yen carry trade unwind was the biggest deal we've ever seen, and it wasn't. So it gets things wrong a lot, and take Trump seriously.
So, Jim, with that in mind, as you look at bonds and stocks, and you look at stocks close to all-time highs and bond yields near the low end of the range for the year so far, what do you think is more vulnerable?
Oh, I think the bond market is probably more vulnerable at this point. The hot CPI number, I think, is still a tell that at least at a minimum, the road to 2% is now, you know, we've been talking about the last mile for 2 years, and we're probably going to have to talk about it for another 2 years before we get there to 2%, that we've got sticky inflation. And if we've got sticky inflation, the Fed is probably going to be done cutting rates, if not maybe one more this year, although I think they might be done for the year, meaning that the funds rate is still going to end the year with a 4 handle on it, even with one more cut. And if the yield curve continues to steepen and we see some kind of normalization of the curve, which we've been seeing for the last several months, that means that you could be pushing the 10-year yield above 5% sometime later this year. And I still think that that's in the cards.
Jim, when you take a step back, it feels like it's a little bit of a numbing environment. There is so much noise. You have, on one hand, about 3 days ago, we were talking about that inflationary risk, and you would have had a lot of compatriots talking about 5% Treasury yields. At the same time, you got inflation data that looked bad on the surface, but people got enough comfort from the individual details to say, actually, this means that disinflation is intact. How do you strip out the noise and have conviction about an inflation call and the possibility of expectations getting truly unmoored?
Well, I think if you look at the way that the markets have been trading, and if you start with the stock market, the S&P is at the higher end of a range it's been since 2 weeks after the election. It's been trading in about a 5,800 to 6,100 range for, like I said, over 2 months, and it's just at the top end of the range. And the same thing has been happening with the bond market too. On November 15th, we were at 450. We're 453. We ended the year at 456. So there's a lot of noise, and the markets move around a lot. Yesterday was a big individual day in the stock market, but the trend is still sideways. And that says that that's still a market that is has little conviction or is unsure of where to go next. So it sees all the news and it's not really reacting to it other than having big days here or there, but moving sideways. And I think ultimately it's going to give away to there's going to be tariffs, there's going to be a little bit more inflation, and interest rates are going to go higher.
Jim, when you talk about the inflationary impulse, are you really attributing that to policy? Or do you see something in the internals of the data that a lot of people are just dismissing as highlighting some sort of pressure that everyone is closing their eyes to?
No, I see something in the data. Every time we have a financial crisis or recession, and we had both in 2020, the economy changes. Change is not worse, it's not dystopian. The big change that happened in the economy coming out of 2020 was remote work. Over a quarter of the country is now doing remote work, and we know what Jamie Dimon's attitude about that is from a couple of days ago. He doesn't like it at all. But it is here. It is not going away. And that is a fundamental change, not only to the way we work, but also to the way we live our lives. And I think that that is building excess pressures on prices and leaving us with higher inflation. Not 8, 10 or Zimbabwe inflation, but more like 3 to 4% inflation. And core CPI just finished its 45th month in a row above 3%. So we've been seeing that kind of pressure, although we continue to try and tell ourselves that, no, we're going to go back to 2%, that, we're going to return, as Jay Powell says, to a pre-pandemic environment. The cycle changed, and we're in a different cycle right now.
Jim, I just love to quickly get your thoughts before we end on what you actually think is going on with tariffs. Because you say the market should be taking Trump seriously, and they didn't. But he didn't actually sign anything formidable yesterday. It's an investigation into these countries. There was not a single tariff placed yesterday. And my read is that he's in negotiating mode to get some sort of concessions, especially out of the European Union. Would you not agree with that?
Yeah, I think tariffs are leverage, and I think they are big leverage. And I think that when it comes to negotiating with our partners, whether it's Canada, Mexico, or the European Union, Trump holds more cards than they do. And I think that these tariffs are a threat, and he wants something else. Now, in the case of Europe, I think what he wants is he wants more security arrangements. He wants them to spend 5% of their budget on defense. And he even said yesterday he wants them, when they're spending 5% of their budget on defense, to buy more stuff from defense makers in the United States. So I think that all of this is more leverage than an external revenue service to raise revenues. I think he wants some of that too, but I think it's really about negotiating, and we need to understand that that's what he's trying to do.
Hey, Jim, great to kick off this morning with you. Appreciate it. Jim Bianco there of Bianco Research. We'll talk about Jamie Dimon a little bit later on the program. The comments this week, absolutely scathing. There is no chance that I will leave it up to managers. Zero chance. The abuse that took place is extraordinary.
With respect to, are you talking about
work
from home, or are you talking about some other things that he was talking about? He has not liked work from home. He thinks that not only is it bad for morale, he thinks that younger workers have a harder time really getting up to speed. We saw kind of a waffling back and forth in Citigroup. A whole host of different organizations are basically saying, look, get back to work, and they have the leverage to do so now because many people suggest they have more of the upper hand than they did, say, 2 years ago.
We'll get to that story in about 20 minutes' time. We've also got to spend the morning unpacking that news conference yesterday. There was one piece of that news conference that jumped out to me, and I didn't see a single journalist follow up on it. The president turned around and suggested that the Europeans had offered to drop their tariffs on autos. It's kind of bizarre, that moment. Then he looked to his side to try and confirm the news. No one followed up. I've seen reports about the Europeans offering to do that, but I haven't seen any confirmation of it whatsoever.
Well, there was one journalist who did ask the White House about it, and what I got back was an FT story from 1 week ago where a European Parliament Trade Committee person that heads it, told the Financial Times the bloc was willing to lower its 10% tariff and put it closer to 2.5%. So potentially, when we say Trump is in negotiating mode, this is what he's talking about. He wants to make that gap much more in line on where the U.S. Tariff is on European car
Did you
imports.
get any clarity on whether the president was referring to the report from the FT or whether they'd heard directly from the EU?
I didn't get much clarity, but what I believe at this moment is that the president thinks this is where there's potential to do a deal on autos with Europe.
This is the reason why a lot of people are benumbed to this, and the reason why this is increasingly noise. Because it sounds like it's the big one, guys, this is going to be it, and it comes out with zero details in a sense that maybe we're going to study something and something will happen, and people take it actually as being a positive because it's not a blanket tariff across the board. You get into the details of what may or may not be negotiated, it's all fungible. This is the reason why this is a market trading sideways and doesn't know how to respond and is just looking how to cut out the noise and look at the positive.
Stocks very close to all-time highs. Equity futures down here by about 0.1% on a session so far. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John, just want to give you the details of what we heard and didn't hear. President Trump ordering his administration to impose reciprocal tariffs on U.S. trading partners. Specific tariffs would be customized for each country and could take weeks or months to complete. The tariffs would go into effect as soon as April 1st, with the announcement of the date seen as a potential opening bid, as Anne-Marie was saying, for negotiations. Meanwhile, TikTok is available to download in the U.S. once again after Apple and Google restored it in their app stores. The decision follows a letter from U.S. Attorney General Pam Bondi, which said that a TikTok ban would not be immediately enforced. There's still no guarantee, though, that it will survive in the long run. Trump had ordered a 75-day review period on Inauguration Day. Hermes sales surging, wealthy shoppers splurging on their handbags over the holiday season. Sales exceeded expectations, jumping 18% in the fourth quarter. Hermes also outperformed its peers like LVMH, Gucci, Kering, retaining strong pricing power and demand among the wealthiest consumers. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. I think Anne-Marie said it earlier this week that Hermes is not Gucci, right?
They're not Gucci. I thought they were going to do well. They're in a league of their own. People line up to buy those Birkin bags.
Stock is up by about 0.9% this morning. Up next on the program, Trump taking game at Europe.
We think the European Union is wonderful. We all love Europe, love the countries in Europe. But European Union has been absolutely brutal on trade. You know, they're doing something else. European Union's been very tough on our companies.
We'll get the latest on Europe in just a moment. We'll catch up with Jeanette Lowe of Strategas from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Check out the euro. It's on the longest winning run of the year so far. Could be day 4. We're just about unchanged at the moment. Euro dollar 104.68. Under surveillance this morning, Trump taking game at Europe.
They haven't been treated as good. You know, we think the European Union is wonderful. We all love Europe, love the countries in Europe. But European Union has been absolutely brutal on trade. They have a 20% VAT tax, which we're considering to be similar or the same as the tariff. Plus, they charge lots of fees, and they're doing something else. European Union's been very tough on our companies.
So here's the latest this morning. President Donald Trump calling out Europe once again as he moves to impose reciprocal tariffs across the globe as soon as April. European Commission President Ursula von der Leyen saying the EU will react firmly and immediately against unjustified barriers to free and fair trade. Our team coverage starts right now. Bloomberg's Tyler Kendall in Washington, Ollie Crook in Munich. Ollie, I've got to come to you as the Munich Security Conference kicks off. What on earth are the Europeans saying back to some of these headlines, not just on trade, but on geopolitics, on foreign policy, on security as well?
I mean, John, half of the people I'm interviewing, I'm informing them of the latest developments coming from Donald Trump. Even people that are running major companies within Europe in the defense sector, when you have Trump talking about having defense budgets for the United States, China, Russia, I mean, this is just all sort of a fire hose of information that the people here are trying to make sense of, and they really are having a very difficult time doing it. I was just speaking to a very senior European official who characterized the peace deal, the negotiations, as I can't really say on air, but it was very, very negative, saying that basically J.D. Vance in his speech might have to dial it back, and that basically it felt as if it was written by the Kremlin itself. So that gives you some of the flavor here. On the other side of things, I think many people are expecting J.D. Vance, who's about to speak in 2 hours' time, not to be dialing anything back, but actually expecting something of a wrecking ball speech, and that really says that Europe, you're on your own. These are the conversations that are going on here. There's a lot of sort of tension. Zelensky just walked in a few. The meeting between Zelensky and J.D. Vance was also delayed because the U.S. is still reviewing what they've been hearing from Scott Bessent in terms of the economic program that could be rolled out between Ukraine and the United States. So again, there is just a fire hose of information that these people are trying to metabolize, and we're going to hear from J.D. Vance in about 2 hours, and that's really what everyone's waiting for.
Well, J.D. Vance, and Tyler, I'd love to bring you in. J.D. Vance gave an interview to the Wall Street Journal last night, and he said there are any number of formulations talking about this peace agreement of configurations, but we do care about Ukraine having sovereign independence. Have you seen the administration walk back some of their more conciliatory remarks towards Russia?
Not necessarily, Anne-Marie, and also important just for context, particularly when we are looking at how J.D. Vance has come into this position. He was one of the staunchest opponents of aid to Ukraine when he was in the Senate. Of course, you'll recall when Congress, about exactly 1 year ago today, was trying to debate additional supplemental security assistance to the country. He was actually the one that ended up leading that charge that kept it stalled until about April, when it ended up passing along with a few other priorities. But interesting to watch here, particularly after we saw President Trump, even in the Oval Office yesterday, suggesting that Russia should be brought back into the G7 to remake it into the G8. Clearly, as we see criticism come out of Washington, that this appears to be a big reversal in U.S. policies, as Anne-Marie, you have been covering closely with these direct talks between Russia and the United States, and how Ukraine all fits into this. We're going to be watching closely, of course, J.D. Vance's remarks shortly.
Tyler, appreciate the update. We'll catch up with you later once we get those remarks, alongside Ali Crook out of Munich. We've got to get back to that quote from Ursula von der Leyen. The EU will react firmly and immediately against unjustified barriers to free and fair trade. The case that the US is building, and you'll see the conclusion of that case in early April, is that these in Europe are unjustified, that in Europe it's not free, in Europe it's not fair, in Europe there are barriers to entry. That's the case the US is building against the Europeans.
And the auto manufacturers are really case in point with the disparity and the increase in the tariff on U.S. autos versus European autos. Where the water gets a bit muddy is the VAT tax and some of these other issues, and that, I think, is going to be some of the hair around this discussion.
Let's get to Jeanette Lowe of Strategas, who joins us now. Jeanette, I think the tough question, what do you say to clients at the moment who ask you, Jeanette, what do you think is going to happen on April 1st? What do you tell them?
So I think the one thing that we've noticed is that it is important to have a difference between tariffs on China and tariffs on the rest of the world. We have noticed that Trump has proposed tariffs several times in the beginning first 4 weeks of his administration, but only the tariffs on China, the additional 10%, have actually gone into effect. Everything else seems to be up for negotiation. So we did have Canada and Mexico already negotiate. We had Colombia already negotiate. They're setting up a time frame, saying you have basically until April 1st to start making some offers. Obviously, you had Prime Minister Modi coming into Washington yesterday. He came ready to offer some things to Trump to try to fix that reciprocal trade relationship with the U.S. And also the fact that these tariffs were announced while J.D. Vance is in Europe for the Munich Security Conference is also important to try to say, Europe, you need to do something to change the relationship with the United States.
Well, Jeanette, we do have the head of the European Parliament Trade Committee saying that they're willing to lower the tariff when it comes to autos. What else could Europe give the United States in terms of concessions in these negotiations?
So I think definitely the autos has been a thorn in Trump's side for quite some time. So getting that rate down from 10% to closer to 2.5 and matching the U.S. rate would be quite important. Obviously, U.S. LNG has also been really important during the entire Ukraine conflict. I think that Trump is definitely looking for Europe to buy more U.S. LNG, and then also defense. So I think one of the things that plays into Trump talking about lowering U.S. defense spending is also having other countries, including India, including Europe, buy more U.S. defense products and equipment. And so that, I think, also kind of goes into this piece where they're trying to get Europe to pay more for its own defense and be less reliant on the United States, but still purchase more things from the United States.
Jeanette, we've been speculating about some of these proposals for a while. What specifically did we learn yesterday from a proposal that was really light in details?
So I think the point is that this could also be one of the things that I thought was very interesting is that Trump did say this might be somewhat of a replacement for his universal tariff that he proposed to do a 10% tariff on all countries. This is a way that they have a new trade law that they're using. It's obviously, it's an old trade law that hasn't been used, but that's where they're looking to actually apply this. But it's saying that this is also more of a one-on-one basis, saying that whatever that country's tariff rate on the U.S. is, if they lower it, that is an ability to avoid the tariffs or to change other non-tariff barriers that are impeding U.S. trade. So it shows that there's actually a lot of room for negotiation, for changes to avoid these tariffs from going into effect, and also shows that it could be done on a more one-on-one basis rather than a broad universal tariff. I think Trump is really trying to focus on countries with which the U.S. has large trade deficits. Those are countries like China, Mexico, Vietnam, Japan, South Korea, Thailand. Those are really probably where he's going to be focused. India as well, actually. But those are where he's going to be focused on, and then he can kind of move on to other countries. But I think that is kind of what we saw as a little bit of a change there, where you see it could be a little bit less broad in the sense of going after the entire, all imports coming into the United States, but also still shows that there is this room for negotiation.
Just quickly, markets are taking this as an idea that maybe this president doesn't want tariffs for tariff's sake to raise money. Do you think it's fair to discount that at this point?
So I think he does want tariffs for the revenue purposes. Obviously, the Congress does have to pass a large tax bill. Congress is not going to legislate on tariffs, but having that revenue come into the Treasury is certainly something that he can point to say that this is not going to cost as much as it has been perceived, especially when we're looking at the deficit concerns, particularly coming out of the House conservatives. But I do also think that it's not that he wants to necessarily have tariffs in place just to have tariffs in place. He wants changes. He wants other countries to make changes that are more beneficial to the United States, saying repeatedly that he thinks that the U.S. has been treated poorly. And I think that is more ultimately his goal.
Jeanette, appreciate the update. Thank you. Jeanette Lowe there of Strategas. Check out the autos on a stock 600. Higher for 5 consecutive days. Trading right through this. Up next on the programme, Eric Nelson of Wells Fargo on risk appetite with trade tensions on the rise. Live from New York, this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never. Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
The all-time high, the intraday record high in the S&P 500, 61.28 yesterday at the close, 61.15, really close to record highs. Equity futures this morning, negative by 0.2% on the S&P. On the Nasdaq 100, we're down by 0.25%. What a couple of days in the bond market. Let's get to it. Let's focus on the 10-year maturity. So on Wednesday, 10-year yields were up by around about 9 basis points. Yesterday, they were down by around about 9 basis points. Even though PPI came in hotter than expected, it was these individual components of PPI. It took a few minutes to figure this out yesterday, Lisa. These individual components that feed into PCE that people took comfort from.
So if you want to know why the bond market rallied yesterday, it was because healthcare costs, airfares, and financial services and insurance inflation came in below expectations. So thank you to those sectors, because that's the reason why a lot of people in the bond market made a lot of money. And the idea here is those feed into the core PCE. This is Morgan Stanley saying that before that PPI came out, they had an expectation of PCE coming in, core PCE, that is the key inflation metric the Fed looks at 0.4%. They downgraded that to 0.3% because of these components. That explains a bond rally that kind of defied our logical understanding on just the headline level.
The BMO's Ian Lingen, PPI trumps CPI, to make it very simple and short. Let's check out the euro dollar, 104.67. The ECB this morning, roses are red, violets are blue. Inflation's on track to settle around 2. You sent me that. That was a beautiful card from the European Central Bank.
That was my Valentine to you, is the only thing I thought that maybe you'd enjoy this morning. So they're using Valentine's Day, I think, to push their agenda of inflation to 2%.
Is that wishful thinking?
It's not necessarily wishful thinking, but the time horizon matters. This, I think, is the important question, and I think that Jim Bianco put it really well when he said, this is, I believe, the 46th straight reading above 3% when it comes to inflation in the United States. In Europe, will there be the same tolerance to inflation remaining above that 2% for a long time if it's out there?
The euro very close to a 4th consecutive day of strength. On our radar this morning, President Donald Trump ordering his administration to consider reciprocal tariffs on a country-by-country basis. Howard Lutnick, Trump's Commerce Secretary pick, telling reporters all studies should be complete by April 1st, and Trump could act immediately afterwards.
This is just a measure. There was no tariffs put in place. As Jeanette was just saying, the only tariffs that we actually have in place right now is those 10% additional tariffs on Chinese imports. Trump is in full-on negotiating mode. These are tariff threats. These are not actual tariffs, which is why the market was really just shrugged it off. And a lot of this was copy and pasted from what he did in 2016. But it might be working if Trump is accurate when he said he saw reporting, and there was reporting, that Europe is starting to think about lowering their auto tariffs. So all these threats might actually work to get him to where he really wants to go, which is the line I hear constantly, reciprocity.
Jeanette also said that this seems to replace that blanket across-the-board tariff. That seemed to give people comfort as well, because maybe they would end up being lower as just a baseline.
At 1 p.m. he's signing more executive orders, right? So it's another news conference. It's like every day.
I think I was right.
You're going to get more
He's looking for
comments.
things to sign. So just
he's producing a show.
Did he sign anything yesterday? Did we get anything signed on tariffs?
Of course we got something signed.
Well, it wasn't an executive order. It was a measure, a directive, an investigation
But it was
to the
signed,
men
was it not?
behind him, who are
Did he
not
sign his
confirmed.
autograph?
I think he signed.
Okay.
No,
Who are
we
not
just saw that.
confirmed.
He held up the signature.
Yes, that
Did
we might
something.
do something in the future.
We're
that
doing
we'll do.
something.
Yeah, that's a big difference from actually saying like tariffs are going on
You're correct.
on X, Y, and Z.
The individuals that can look into 301 and 232, Jameson Greer and Howard Lutnick, are not confirmed yet. So he's directing them to do this when they get into the office, which is why you just have to punt this all.
2 months is going to feel like a lifetime, so work with us here. Let's turn to this story. The annual Munich Security Conference kicking off today with the future of Ukraine, the top item on the agenda. Vice President J.D. Vance set to deliver remarks later this morning. When we get them, we'll bring them to you. He's also expected to meet with Ukraine President Volodymyr Zelensky later today.
One thing I think is interesting is J.D. Vance sat down with the Wall Street Journal before he's going